market cap moving 7% on a fairly large volume, 2 million shares traded. So volumes are substantially higher than the averages too. So something's brewing here. Now, before we go to Kush Bora, Mahima, any thoughts here? Avenue Supermarts, 7.5%.
Right, I think so. The gain that we've seen in the counter is post its con call, and it's interesting commentary that the management has given. This is our stock of the day also today, but I think what stood out for me was the confidence that the management has shown in saying that, you know, no matter what competition quick commerce is giving us, we'll stick to the brick and mortar model, and they've gone out and said that to beat this competition, we'll be more aggressive in terms of store addition, and that confidence in, you know, the management's tone is something that is probably, you know, something that's excited the investors as well, and that's why we're seeing the kind of uptick in the stock that we see. You
know, the other thing was that very interestingly in Damien Castle's note that he writes every weekend, right? Last weekend of CLSA, CLSA bits and pieces. Last Friday, from amongst the stocks that were highlighted as turnaround stories, included Bajaj Auto, Bandhan, and Avenue Supermarts.
Interesting.
And that's, I mean, I'm not saying that's the reason really. It has to be the con call. Yeah. But it's very interesting that some people found reason out there for Avenue Supermarts, which has been on a slumber for such a long time, to make an up move. So, pretty cool move. Actually, Kush Bora is with us. Let's go to him for this and more. Kush, great having you. Thanks for joining in. Usually we start with the index, but I'm tempted to start off with what Mahima said is our stock of the day, which is Avenue Supermarts. After a really long lull, hibernation, slumber, what have you, a smart, sharp uptick there. What do you make of it?
Hi, Neeraj. A very good afternoon to you and to the viewers. Indeed, the stock of the day. What a stellar move. Now, what this has done is that, you know, it's made a few technical, checklists, tick the right boxes. So there was this sharp falling trendline resistance that's been broken into. Support at the 200-day moving average, that's a tick in the box. Rebound and crossing the 20 and the 50-day moving average, that is also a tick in the box. Now, for most parameters, this would still feel like a buy, because on the upside you've got resistances near the 4600 and about 4750 marks. Now, the only thing is that if you see for the last about 3 months or so, the stock's not been able to take out the 4500, 4550 zone. Now, if you're looking at a positional bet, the risk-reward ratio, despite the kind of moves that the stock has made today, is fairly favorable. So you could keep your stop loss around the 4000, 4050 mark and still play for 4750 and higher levels. So risk-reward ratio, despite the kind of moves that it's done today for a positional trade, still favorable. Minor hurdle or resistance I would call around the 4500 mark. That needs to be taken out. On the whole, this could be that day where the tide might turn for Avenue Supermarts.
Okay, some flashes on your screen on the India-US trade deal, something that is the most watched out for thing. I think from an Indian investor's perspective, more than the Fed, you could argue, it is this trade deal that people are watching out for. And Bloomberg reports that India is eyeing the fall season, which is the September, October, November period actually. And now they're saying actually the September deadline for US deal as Trump threatens tariffs. Remember, overnight, Donald Trump has said that the India tariffs could be 20 to 25% non-committal in the passing, but mentioned 20 to 25% tariffs, which in a normal course of normal parlance would have gotten the street rattled. But I would reckon that everybody believes that all of this gets settled, gets negotiated, and therefore it will not be the worst case outcome. But now, at least as per the Bloomberg story, there is some timeline that we are watching out for. At least India is eyeing that timeline. So keep an eye out there. Okay, Kush, what about the markets or the indices? Are you taking a trade or are you lying low until expiry tomorrow or the Fed decision tonight?
So this is the view from yesterday continues where, the trade is really a short covering bounce that you're playing for now. We mentioned 24,900 and 25,000 as the resistance zone on this recovery move. We're seeing the Nifty inch closer to that. I will not be surprised if we actually, see a few call writers, cover their shorts and run for cover, as Nifty approaches 25,000. But beyond that is where the challenge lies. Actually, if you see what's happened in this entire month, starting of the month, the range was close to 25,600 to 25,300, then from 25,300 to 25,000. And now towards the end of the month, the range has shifted lower from 25 to 24,600. So there is a very clear shift in range, consolidation for some time, and then a further breakdown. given how short FIIs are and how oversold, as we've been talking about, Nifty has been for some time, I won't be surprised to see a further short covering bounce, but may not happen just tomorrow. Maybe this expiry might see Nifty trade towards 25,000 and then close around that mark. Beyond that, there could be a possibility of Nifty inching higher. So for now, the view that you play for a short covering bounce continues. The level on the higher side is 25,000. And if you're taking a position in the future segment, then keep a stop loss towards the low point of the dip, which is close to 24,770.
Okay, and what about your picks for the day, Kush?
Plenty of stock specific actions. So still going with two longs. HDFC AMC continues to impress with price and volume action. There was this wild consolidation for 7 sessions. It's breaking above that consolidation range. So on the upside, you've got targets of 57.10, 57.95, a stop loss near the 55.50 mark. The second stock is PI Industries, fairly similar to HDFC, except for the fact that the consolidation here has been fairly longer, about nearly a month and a half. So on the upside, you've got targets of 44.20, 45.20. Keep a stop loss near the 40 to 20 mark. HDFC, EMC, and PI Industries on long side.
Okay, all right. So those are the picks that Kush has for the day. But, shifting focus to the Alcobev space, Allied Blenders came out with its earnings and it's a stellar set of numbers for sure. Revenue up 21 or 22 odd percent, EBITDA up 50 odd percent. Margins have improved significantly and net profit also almost more than tripled. And to discuss as to how the quarter has gone by and how things are shaping up for the company, we're joined by Alok Gupta, Managing Director at Allied Blenders Distillery, is joining us now. Mr. Gupta, always a pleasure speaking with you. It's been a great quarter for you yet again. It's the fourth quarter where you've seen good growth in terms of profit as well. Just want to get a sense because, when I was going through your earnings, I realized that strong volume growth has been coming from the premium segment. Now, this has been the case for other Alcobev companies as well. But, it's not been at the same pace as Allied Blender has been seeing. I just want to understand what is it that you're doing different?
Magician never reveals secrets, so I will share what I can. I think from our industry performance, our growth in the P&A segment is roughly 3x of what we have seen in the market. So we continue to gain market shares. I think over the last 4 quarters, the focus has been on profitable sale, identifying right SKU, right market, and working with our distribution partners to make sure that we are well available in terms of our presence and marketing. So I think it's just doing the right things on the brand. Of course, Iconic has been an outright winner. It continues to be second in a row, the fastest selling spirits brand in the world. So that's given us a nudge as well. But the focus has been on driving our P&A sales.
Mr. Gupta, in terms of margins, you ended FY25 with 12%. You're also doing good backward integration, but your marketing spends might go up considering competition plus UK FTA coming into place. Do you think that there is further upside to your 12% margins, or do you think they'll be in the same range of that 12% mark in FY26?
There are multiple levers because of which the margin should increase. One is the FTA. We are one of the largest exporters of bulk scotch, the largest certainly amongst the Indian players. Once the new duty structure is fully implemented, we expect at least a 200 basis point jump on our margins. The backward integration that we are doing in the area of ENA, which is a captive raw material, malt, which is again a captive raw material, and PET bottles should help us again get a bump of nearly 300% in terms of our margins. So our exit margin Q1 FY26 will further increase on back of FTA and our backward integration program.
Alok, good afternoon, Neeraj here. I heard 2 instances of a margin increase that you spoke about, right? So if you had a 12% margin number, right, in June, you reckon by the end of the year or first quarter next year, you could be maybe 400, 500 basis points higher than this?
So one is related to FTA. So clearly it's around as and when FTA policy is implemented. So if this was to be implemented in Q4, we should see an immediate impact on our gross margins and therefore on our EBITDA margins. As far as our capex program is concerned, I would say we should see some benefit coming this year because our PET program, our PET project is taking live next month. part of our ENA capital consumption has already come alive. But by FY27, quarter four FY27, we'll see the full impact of the backward integration.
Got it. Yeah, and you know, I mean, of course, some of your distilleries are already at massive capacity. I think the Aurangabad one was 100% capacity or what have you. The question that comes to mind is, I remember you making a point sometime that maybe the industry needs to move away from volume of casks sold to some other metric, and clearly a hint towards the premiumization. Now, this FTA and other factors, do they actually give a boost to the premium liquor segment? And do you believe that over a 5-year period also adds to your operational metrics and the kind of growth that you want within your company?
I think I have a short answer. The answer is yes. The luxury segment in India, let's say a price point of 2,000 rupees and above, is just about 3% of the total 410 million case market. So with the price rationalization, I think that the rate of growth of luxury brands will increase and will accelerate, which means from a current 12 million cases, it could well double over the next 4 or 5 years. And that creates a tremendous opportunity for the portfolio that we are building. Now we have 2 whiskies. We have Art House, which is a blended scotch. We have Woodburn, which is a contemporary Indian whiskey. We have 2 gins, Pomori and Zoya. We have a very, very high quality premium dark rum. We're working on a couple of new brands. So over the next 2 or 3 years, we believe that with reasonable market share gain, I think it will have a significant impact both in terms of quality of margin and quality of revenue.
Mr. Gupta, you know, in your May con call, you did mention that if FY26, you're looking at a double-digit volume growth and a mid-double-digit value growth. Is this considering the UK FTA as well, or there is a change in that guidance?
No, the guidance remains the same, and it is not linked to UK FTA because we do expect it will take a bit of time for the UK FTA to kick in.
And how much should that time be? Is there an estimate as to when the perks start to kick in?
Well, from what I heard, that it will take a minimum of 6 months to 9 months. So we are hopeful, fingers crossed, that we will see some benefit of this coming in Q4 of this current financial year.
And considering that, does your capex guidance then change?
No, the guidance that we've given for FY26 is without considering any UK India FTA because the timelines are not in our hand. So as and when the announcement in terms of implementation guideline is made available to us, we will think of what changes are required either in our volume guidance or in our capex guidance.
Alok, I believe one of your facilities in Telangana was to be operational or will be operational in this quarter. The Telangana malt distillery, I believe, was on track for quarter 4 FY26. Does it still stay on track?
Absolutely. We have 2 new facilities coming up in Telangana. One is the PET facility where we'll make 600 million bottles annually. That facility comes live next month, which is within the quarter 2 as we had outlined earlier. And the malt facility, which is India's first single malt distilleries, will come alive in quarter 4 of this financial year. So we are absolutely on track.
Got it. And Alok, I think you've spoken about this enough, but I still wanted to know the overdues and predominantly from Telangana, right? Now, you mentioned that the situation is improving. Is there an update? This was the last quarter. Is there an update on that?
Well, the update I can share with you is that the status quo. So payments for supply of the month is being released on time. However, we've seen very little movement on the overdue front. We're also hopeful that post the election, the Panchayat elections in Telangana, the subject of price increase will also come into attention. And given our scale there, we should benefit in terms of incremental margins. But on the outstanding bit, it is status quo for now.
One last quick question, Mr. Gupta, to you. Maharashtra liquor policy, what's the impact overall on financials?
Maharashtra liquor policy, until and unless the MML, which is the Maharashtra made liquor policy guideline, is not given, is very difficult to assess as to what will be the final impact on the industry. So we are keenly awaiting guidance and clarity from the government in terms of what it will entail in terms of participating in the MML business. So it's a bit of wait and watch right now.
Okay. Alok, wishing you all the best for that and more. Thanks much for taking the time out and being with us.
Thank you very much for inviting me.
That's Alok Gupta of Allied Blenders, and good quarter. Let's see if this last day, I'm hopeful of the things improving. The stock has come off though, so keep that in mind. 492, it's also had a bit of a rally, you have to admit, over the last 3 odd months. Okay, so that's of course on the liquor side. On the gems and jewelry side, IGI posted a strong quarter one, but forward valuations remain elevated, possibly prompting investor caution. Operating margins have declined as well over 3 quarters, while working capital gains spiked to 113. Mahima, you cover this closely. What do people have to say about these valuations?
Right, so even if we take a trailing 12-month valuation, that for sure is expensive at 39 times. But even if you look at the forward P of 26 or 2027, they don't look cheap at all. From a 39 times P, they'll go to around 31 times P by 2027 is what the estimates are suggesting right now. So considering all of this, I've tried to pull out as to what are the things that are kind of not working in the favor of the company. Although it was a stellar set of numbers in Q1, but operating margins have come down constantly. If we take a look, because they follow a calendar year, December 22 the margins stood at around 68%, which went up to 71% in 2023, came back to 57% in December 2024, and as of first half of 2025, that stands at around 61%. So we'll have to see how operating margins have remained under pressure. And this could also be because overall certification for lab grown diamonds is also on the rise. Now in terms of the overall reports and certification revenue, that has also come off. Number of reports declined by 3% QOQ, and certification revenue has also declined around 2 odd percent. In terms of working capital days, now this has seen a significant rise, a sharp increase there, because December 22 that stood around 28 times, but that's gone to 33 in 2023 and almost 113 in 2024. So that's an important metric to track for sure. In terms of cash conversion also, that has also spiked, because December 22 it stood at around 47. That days has gone to almost 57 by 2025. Lastly, in terms of key risks in the lab-grown diamond certification that they're doing, overall pressure in terms of pricing and product mix is something that could, probably significantly impact the profitability and also impact the realization going forward. And further improvement in quality of LGDs, I mean, it's still a debate as to how, they'll be grading those lab-grown diamonds, and that's going to be an overhang for sure for all of these institutes that go ahead and certify diamonds. In terms of other risks, of course, relevance of third-party certification may go down if lab-grown diamonds really pick up in India. Plus, any technological advancement, which has been the case in this space, could decrease the kind of external validation that's happening through these third-party certifications. And lastly, competition, of course, is intensifying in this space. So this is with regards to where IGI stands, and a few things to keep in mind apart from the kind of growth that the company has seen in the past few odd quarters. Kush, I'll come to you on this one. It's come off from its day's high. IGI currently trading at 3% higher, but off completely from its day's high. Is there a trade there?
So, there could have been, had the stock actually sustained higher, the 422 resistance, that has been acting up, the stock's actually given it, given up that higher level, as you rightly said, off the high point of the day, which means, there is definitely some supply pressure. I would actually consider this more as a buy on dips kind of a strategy, where if the stock actually does retrace to 405 levels, 400, 405 levels, where the 20-day moving averages, the stock has a tendency of rebounding from there. So if you do get it at a dip closer to those levels, then it might make more sense to buy. Then again, 422 and the high that the stock has made today, close to the 440 mark, becomes your target. On the step down, 385, which is a good support zone, will be your stop loss. So don't buy today. If you get a further dip, then it'll make a more interesting buying or an accumulation entry point.
Okay. Time for a quick break though. As we hit that break, hear out a slice of a conversation that we had with Mr. Biju George, Director of Shipbuilding at Mazagon Dock Shipbuilders earlier today, and asked him if Mazagon's first quarter earnings had a surprise element in store or no.
The quantum of promotions came as a surprise. However, promotion per se was not a surprise because it's in the offing. It's driven by the market conditions. It's driven by the shipbuilding boom which presently our country is experiencing, as well as also the global boom in shipbuilding. And also contributing negatively to this is the emerging geopolitical scenario, where some of the, especially for export projects, where most of the equipment fit has to be sourced from NATO nations. And these are all contributed for increase in price of this equipment than vis-a-vis what we had estimated. And therefore, we have done a very conservative provisioning. So to ensure that no further provisioning would be required in the subsequent quarters, so that overall on a yearly basis our revenue and profitability can be maintained and sustained in the levels it was anticipated.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
But
for the
क्या
long
रहेगी
term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Right, a flash that went by earlier. Mahindra and Mahindra results are now coming out today and not tomorrow. Remember, tomorrow is going to be a big, I think tomorrow, right, was supposed to be a big results day. Eicher, M&M and TVS and one more. Now I think M&M is coming out today and the stock has shown a bit of a spike. So keep that in mind. Okay, there is some more news flashes. Moil is saying that their numbers are not good. So revenues are down 20%. And bottom line is down even more, as a result of which that stock has seen a 5% downtick. So not the best of numbers, and it's duly showing in the way the stock is reacting. I think I also saw some commentary from KPIT, if I'm wrong, on the flashes, and I think KPIT Tech is saying that their numbers second half could be led by some client spending, and I think KPIT Tech has reacted positively. Hyundai is out with numbers as well. 7.7% downtick in PAT, 1336. I don't know what the estimates were, those come, but be that as it may, the quarter by itself doesn't look very, very solid on the net profit front, at least with this 7.5 or 8% downtick. So that would be probably seen as a bit of a dampener. You know what, I think we should get in Puneet to briefly talk about Hyundai, as well as, well, maybe M&M coming in earlier as well. He'll be a happy man. Tomorrow I'll have one less company to track. But just on Hyundai as well, it'll be important to get Puneet. But while we just wait for all of that to happen and keep an eye out for KPIT as well, it's time of the show wherein we get you what dealing rooms are recommending in the session today. So let's get in Somit with all the chatter from the dealing rooms. Somit, good afternoon. What have you heard today?
Well, pharma stocks have been in focus. Aurobindo Pharma, Sun Pharma is a couple of stocks along with Maruti is what dealers are focusing on. They're saying that there are buy flows on HNI and PMS desk ahead of the Q1 numbers. So keep an eye out for these counters. Aurobindo Pharma, Sun Pharma and Maruti. For AU Small Finance Bank, there are buy flows on large HNI desk on anticipation of the fact that the bank might get their universal banking license anytime soon. They're expecting this to come in the next 1 week. For Prestige, dealers are indicating that there are buy flows at lower levels on anticipation of some positive announcement that could come in. For UPL and Patanjali, dealers indicate that there are sell flows seen at higher levels on institutional desks. This could also be because of some profit booking, because of late both the shares were gaining a lot, and there could be some profit booking in trade because of which there could be the sell flows. And lastly, when it comes to RBL Bank, the stock has been gaining again, and the buzz on the street is that a potential fundraise announcement could come in anytime soon, and that's the reason the stock is up 2.5%. And one more stock that I would want to highlight here is Saurashtra Cement. That stock is also up around 12%, and the buzz on the street is that a deal might be again back on the table. The company might be getting sold to one of its larger peers, what the buzz on the street is. This has been a buzz for Saurashtra Cement for quite a long time now. The deal again might be on the table, and hence the stock might be gaining in trade. That is Saurashtra Cement.
Okay. Well, so much to unpack. Somit, thanks so much for that update. So 5 or 6 names. Keep an eye out for Saurashtra. Maybe those graphics one there, but you heard it from Somit. So you get to know that. 4 or 5 things to keep in mind. 14% higher for this one. I tell you what, when we go to Kush Bora for a lot of these stocks, there will be a number of things that he'll write down. So Kush, write down Hyundai, M&M, KPIT, Saurashtra Cement and more. We'll come back with all of those with you. But since Puneet is here, let me quickly go to him first, because Hyundai numbers and Puneet, surprise, you don't normally see a company a day before the results come out and say we are declaring the numbers today. Anything that you're hearing on that?
Well, let's start with Hyundai first. That's the easier topic to start with. Numbers largely seem to be in line for this particular quarter, but that's largely in line with estimates. It's still a weaker set of numbers. The revenue was expected to come in at 16,706. They've come in just a tad below that in this particular quarter, while margins were expected to come in at somewhere around 12.2%. It's coming at 13.3%. So it's a positive beat on the margins. In terms of profits as well, profit expectation was largely of about 1,263 crores as well. And here as well, numbers largely seem to be in line with the estimates. But in this particular quarter, the sales were down 6%, and hence we are seeing that kind of impact on numbers as well. And it seems to be like the story similar to last year, where all the growth estimates are largely panned in quarter 3 near the Diwali season, and the growth expectations will be driven by what happens in that particular quarter. We might see some kind of negative impact on Hyundai, because on a year-on-year basis it's still a weak performance, but largely in line with the estimates, at least on the first 4 numbers.
Okay. Puneet, you know what, I'll spare you the M&M piece, because it's almost difficult to know, right, what the company must be thinking. I don't know if you have a thought here or no, but it's difficult to kind of call that. So maybe leave you on that. But thank you so much for... sorry, do you want to say something?
Yeah, just one bit, because tomorrow we actually have M&M along with Maruti, Eicher, as well as something like TVS, and the con calls are also clashing for all these companies. So that might be one of the rationales. But just hearing that the press meet is still scheduled for tomorrow as of now, and the company does hold a press meet as well as a conference call separately with analysts. So as of now, the conference call is scheduled at 6:30 p.m. tomorrow. We might see that shifted to today as well, but that could be the only rationale, because we have too many results tomorrow for the auto pack, and largely today, apart from Hyundai, there weren't any. So that could be the only rationale. So we'll await some more numbers coming for M&M. If it comes before market close, it'll be a good comparison to make, because it'll be very, very strong growth expectations from M&M. A 26% growth is estimated in this particular quarter. Margins as well to do very well. So that could be the only bit, Neeraj.
Okay, Puneet. Keep us updated though if you learn something. I will too if I get to learn something. Thanks for that though. Busy day for Puneet for sure. Sudeep Bandyopadhyay joins in. We'll go to Kush Bora on some of those stocks as well. Get to the stock of the day too. But since Sudeep is with us, Sudeep, let's kickstart this. Hyundai, weakish, I mean, nothing kind of a quarter. And then how many times in your memory have you seen a company say that, oh, our results are going to come out tomorrow, we are preponing the release to today? M&M has just done that.
Well, I think that's the first time. I don't recollect.
Exactly.
I mean, you can also add to that. I don't know whether you have seen anything like
that. No, I haven't.
First time I'm hearing this, but I suppose it's a good thing. When the company delays, it's a cause for concern, but it's they're preponing it, so it's well and good, and I think it gives relief to some of your colleagues. Instead of all getting bunched up tomorrow, they get a little bit of breathing time at least. As far as Hyundai is concerned, I think this was on expected lines. I don't think we will see great set of numbers from any of the 4 passenger vehicle guys, and I think Hyundai is in the same bracket. Yes, it is by and large in line with what was being expected, and that's about it. So nothing really to talk about. Let's hope for a recovery during the festive season, and probably numbers will be good. If there is a management commentary coming somewhere, we will be carefully watching that.
All right. Thank you so much for that, Sandeep. But the stock of the day today most certainly is Avenue Supermarts. The kind of spike that we've seen in the stock since the con call began is just amazing, because it's seen a spike, and it's the kind of momentum the stock has seen has continued throughout the day, up 7% as we speak. And this is because management has shown confidence in the con call, and this is a yearly con call that they do every year. Just to give you key takeaways on what the management has said, said, I've divided into different parts. On demand, they've said they've continued to see consumer demand going up both in rural as well as urban areas. DMart is not just for middle class, is something they've said, and DMart Ready is targeted towards shoppers who are not price sensitive. So this is their aim and their motto with regards to where DMart Ready stands. On quick commerce competition, they've gone out and said they've continued to remain bullish on the brick and mortar model, no matter how competition is faring when it comes to quick commerce. They will work on an online model, but something that works for them and something that matches their ideology is what the management has gone ahead and said. In terms of the overall picture in quick commerce, they're saying that the best way to face quick commerce is by adding more stores. So they're going to be more aggressive in terms of store addition. They're not seeing any financial metrics deteriorating because of competition that the quick commerce is giving overall, is what the management has clearly said in their con call. They've invested in cities to improve experience where quick commerce is going aggressive. So that's something they've acknowledged, that yes, there is competition, but this is the way they will compete and combat the competition. They don't want to get into 30 minutes delivery race, is something that they've made very clear. They believe that we'll prefer value, giving value to customers over a quick delivery. In terms of overall store expansion plan, they've said that they plan to accelerate the store additions. They target 10 to 15% of annual store growth, and doubling investments in new store is something that they're aiming at, and that they've also proved by recently putting up a big store in UP as well. In terms of DMart Ready, they've said that they're set to expand where there is customer demand for DMart Ready, because they are customers that are less price sensitive. They aim for 3 to 6 hour delivery, not a 30 minutes delivery, and higher customer stickiness is seen in DMart Ready as compared to where the competition stands. In terms of state expansion, they're saying that they're entering new states, and this is not something that's challenging for them. So they are comfortable when it comes to expanding into states like UP as well. And lastly, in terms of private label, clearly again here they've said that they will not focus on growing their own private label as a brand, but focus on business growth overall. So that's the overall view of what the management has said. Kush, I'll come to you on this one. I believe the kind of positivity that we've seen in the stock is because management has shown confidence that no matter what, we are going to grow. And that positivity we are seeing in the stock, and this is after a long time for Avenue Supermarts. What is your reading when it comes to the charts? Is there a further momentum that you're seeing there?
In all likelihood, there could be Mahima further upside, because if you see, the stock's actually been in a range where about 4,039.50 on the downside has been tested multiple times, in this calendar year itself, and then the stock's rebounded from there. Yet again, you've had the stock rebound from precisely those levels. Now, as I mentioned at the start of the show, 4,500 seems to be a bit of a resistance, a mild resistance, something that the stock's not been able to take out this calendar year. But with the kind of momentum that it's got today and a few technical parameters that the stock has checked, if this 4,500 level is taken out, then you're looking at 4,750, 4,800 kind of upside moves as well. Despite the kind of move that the stock has seen today, it's far from overheated territories on any kind of time frame, be it daily, weekly. So yes, there is steam to this upside. The immediate level to watch for would be 4,500. Beyond that, 4,750, 4,800 also.
And what about M&M and Hyundai, both one after the other, or any counter in specific that you're liking in the auto space apart from these two?
So M&M looks good. The reason is that M&M has a tendency of consolidating, dipping towards the 20-day moving average and then rebounding. Today also, if you see, the stock breached that 20-day moving average support, but on the back of an early release of its numbers, the stock actually regained that level. So I think even if the momentum is a little slow, you want to add counters like M&M to your portfolio, to your trading positions when when the consolidation phase is on, rather than once they give you a breakout and then you have to chase momentum. So M&M looks good. On the downside, you've got today's low, which incidentally happens to be the support zone for the medium term. So 3150 as your stop loss for the recent swing high of 3300 and 3450. M&M does look like a good play. As I said, maybe the momentum's a bit slow, but the trend from a near to medium term perspective is surely upwards.
Okay. Interesting names out there, and interesting moves out there on a lot of specific stocks today, but autos certainly remain in focus. I heard Sudeep mention that not too many of the auto names will have a good number. Sudeep, there is a chat going on, a talk going on that Maruti might actually surprise on the upside. If that were to happen, what would you make of that? Would that make that stock interesting, or could it be one-off?
Well, it will definitely be interesting. I think the way the markets were positioned, the demand scenario was in rural and urban India, particularly amongst the, I would say, the value conscious customer segment. I think it will be a pleasant surprise if Maruti comes up with a number which does surprise the market. I am looking forward to the festive season pickup in demand, and I do believe that's going to happen. There are, good monsoon is around us, and that should help the demand to pick up based on all the other parameters going right. Global Indian interest rates are coming down. That should help. So yes, second half of the current fiscal, I'm looking forward to a better situation as far as passenger vehicles are concerned. But this quarter, I'm not really as much hopeful, and anything better than what is being expected will be a pleasant surprise. Remember here, we are not talking about SUV, we are not talking about tractors, because that's Mahindra, that's not Maruti, that's not Hyundai.
Got it. By the way, just before we get to Mr. Nalin Gupta, I just want to mark KPIT numbers. Not very inspiring. The stock is maybe up slightly, but the numbers are okay. Flat revenue picture. EBIT fell about 10.7% quarter on quarter. EBIT margin down 200 basis points at 15.5 versus 17.4. As a result of which the bottom line is down 30%. And there are some one-offs as well, of course, but still, EBIT is down about 10.7%, so keep that in mind. But I think they've done this tie-up with JSW Motors, and I think which is what has led to the stock doing what it is doing. EBIT margins not looking all that solid, but the stock, after having corrected a bit, is just kind of moving slightly higher. So, Sudeep, any quick thoughts here? KPIT Tech, do you track it?
I do, and I think they're doing the right thing by tying up with OEMs, and that should, in the long run, help them in a big way. Yes, I think the results are nothing great at this stage, but I continue to maintain my positive view on KPIT Tech.
Okay, positive view on KPIT Tech. Remember, the stock has corrected quite a bit, but let's see how it does ahead. Now, let's welcome in on the show Nalin Gupta, MD of Kumar Infra Projects, wherein their numbers, well, you couldn't find too many faults. Revenues up 15%, EBITDA up 17.8%, margins expand about 220 basis points, as a result of which the bottom line expanded by about 19%. Nalin, good having you. It's been a while, but good talking to you. How would you sum up the quarter in line with what you had estimated? Because we had heard murmurs of some spends, at least on the NHAI highways being low, maybe not MMRDA, but did that have any bearing on the kind of execution or order inflow that you had to do?
Well, so I would say that in terms of order book, I would say it was in Q1, I would say it was a little bit on the slower side. And but the target of the company to bag orders worth around 6,000 crores for this fiscal year. We are very comfortable and sure about bagging this order. And in the Q2 itself, we should be seeing orders nearly around 2,000 crores is what we are expecting. So I think in terms of the order book, we should be able to match the requirement that we are looking for. And of course, that's being the minimum requirement of the company that we are targeting at. For the execution, we cover up with the new orders. But we are looking for good orders, but also with the margins that the company intends to. So we don't intend to, really book orders just for the heck of booking orders without good margins. So that's the reason. But overall, I think the infra sector is doing really good. And going forward in this coming quarters, I think there should be good inflow of orders happening. So we are quite bullish about it.
Nalin, I'm just looking at the data that my colleague has provided to me. Your order book, I believe, stood at about 21,000 as of June. And
that's right.
I hear you say that you are looking to only bid for projects which have good margins. And,
that's right.
And she tells me that the bidding target for FY26 is about 20 to 25,000 crore rupees worth of projects. So you're saying
That's right. So
there is almost an equivalent amount of your order book, existing order book of projects which are available to you at good margins.
That's right. So if you talk of order book, it doesn't mean that, the new orders, if I'm bidding for 30,000 crores,
You will get them, yeah.
the order.
Agree, you will
So-
not. Huh?
So that's the reason. So even 25-30% of the order book, if I clock, I'm covering the target that I'm intending to.
Okay. In terms of your, Mr. Gupta, hi, Mahima also joining. In terms of your key projects, what are the kind of new opportunities that you're looking forward to in, let's say Mumbai Metro or Pune Metro? And you said, correct me if I'm wrong here, you said the kind of conversion that you're seeing on your bidding pipeline is roughly 25 to 30%. Is that reading correct?
Yeah, you can broadly say that because it's like you keep bidding for different jobs. And depending upon the nature of job, depending upon the geographies, the competition level keeps changing. But the core competence area of J. Kumar being into elevated corridors, into road tunnels, into metros. So these segments, we stand at a very comfortable and a very strong position in terms of competition as well. So currently that we can see like Bombay Metro is going to come up with line 10, line 11, line 13. Thane Metro has already floated their elevated corridor tender, which we are about to bid in a month's time. Again, we have recently bidded for Pune Metro, which should be seeing the price bid happening in the month of August itself. And again, we are bidding for Delhi Metro. We are bidding for some elevated corridors for MCGM, for MMRDA. So these are the recent ones that we'll be going for. But in a long-term perspective, if you look at 6 to 9 months' time, there are various other metro projects as well as the elevated corridor, which includes Daisar to Virar, which is the elevated corridor which MMRDA is reworking on it. So that project is also about to come. So there are a lot of as well as NHAI and different metro sectors. So we are very hopeful about the order book that we should be able to back.
Any kind of execution delays that you're seeing here? Last time, if I'm not wrong, in your con call, you had said Delhi NBCC project was the one project that got delayed. Is that on track now? First question, and any other projects that you're seeing delayed, especially in the water segment?
Yeah, so I would say the entire order book of 21,000 crore is well on track. Only a 350 crore, as you have rightly said, the 350 crore Harinagar tender of NBCC is on a slow track, but we expect in the month of September or October we should be seeing some traction in that project as well. But it's a very small size of project for us to be really worried of.
And what's the update with regards to where fundraising is something that was on the cards, and what will that fund that you're raising be used for?
Well, so currently we have passed an enabling resolution with regards to fundraising because we don't want to really fully bank upon debts, and that's how we have thought of it. And there are some looking at the futuristic opportunities that we are seeing going forward, and the big size ticket projects which are coming up. We have thought of it, but we are waiting for the right opportunity and right time. So let's see how it goes.
Okay, Nalin, one final question, and I'll end with what I had started off asking you. Do you believe the ordering activity looks poised for a company like yours, which has a higher base now, to clock in, let's say anywhere, I mean, whatever your CAGR number might be, but like a particular percentage of compounded annual growth rate over the course of the next 2 or 3 years, and what would that number likely be?
Well, so if you look at the growth rate, we target that minimum 15 to 16% growth rate we look at. And so the current year, we should be clocking in top line of close to like 6,600 crores, and followed by FY27 of nearly around 7,500, broadly you can say. So if we talk of, it would be like a minimum 15,000 crores or 12 to 15,000 crores of order book that we should bag in these 2 years. So I would say if you look at FY24 itself, we bagged orders of more than 10 to 11,000 crores. So bagging this size orders, you have to basically, when Firstly, there was a little slowdown in terms of the government inflow of new orders. But with the current internal informations that I keep gathering from various departments, there is ample amount of works that will be floated in a year's time. So I'm very, very, confident that bagging 15,000-20,000 crores of orders in this coming next 2 years is absolutely not a matter of concern for a company like J. Kumar with the construction expertise, financial discipline, and core competency in these areas. I think it's merely a matter of time to get this achieved.
All right, Mr. Gupta, thank you so much for those insights, and thank you so much for taking out the time, and all the best for FY26.
Thank you very much.
All right, Sudeep, I'll come to you quickly on J. Kumar Infra. Any view there, and any player in specific that you're liking in the infra space?
Well, a couple of things. I think, when you hear the management talking, and when you hear and understand what's happening all around us, I think there's no dearth of orders. These companies who have been there and are delivering projects, there'll be no dearth of orders. All of them will get tons of orders, which I think their success will depend on execution and maintaining a decent margin. We have to focus on that. We have to focus on execution and the margin profile of the players. And that's where I sometimes I'm a little careful about the smaller players. I'm not talking about J. Kumar Infra. I think they have been doing a decent job, and I think they have the potential to significantly do better from here on. So yes, from somebody wanting to take a little risky bet on infrastructure, J. Kumar Infra can be acquired. But if I have to recommend one share to investors, I will go to the big daddy, which is Larsen & Toubro. Look at the numbers, look at the order size, look at the the delivery track record. I think if you want to play safe, I think Larsen & Toubro is the player to look into, because the margin profile is also changing. This quarter the margin which they declared yesterday was nothing great, but they're given a guidance of steady progress over the next few quarters, and they've maintained their margin guidance for the year.
The stock is up 5% as you speak, Sudeep. Kush, I'll quickly come to you on Redington. Anything that you're seeing on the charts, because the stock is tanked on the back of its Q1 earnings. But what are the kind of support and resistance levels that you're seeing for Redington?
So immediate support for this one comes in at 255. That's where the stock had taken support a couple of times before rebounding in the past. So maybe that's the level to look for. But even if it does take support at that level, I won't really be jumping in to buy at around that level, because this might perhaps see some more sideways consolidation. And if 255 is broken, then you're looking at 237, which is a 200-day moving average, as the next level of support. So yes, don't be in a hurry to buy if at all, and look for these a couple of crucial levels as support. See if the stock actually consolidates around around those levels, but don't be in a hurry to jump and accumulate.
Okay, Kush and Sudeep, thank you so much for taking out the time and speaking with us at NDTV Profit. It's time to slip into a
just before I get into break, just wanted to mark that the market has stayed almost at the same level. Volatility is down 3%. It's staying that way. Nifty Bank is flat. IT is about 1/3%. There's virtually no movement in the market. It is very, very listless, and clearly showing that ahead of the Fed decision, the market doesn't want to do too much. I would doubt that the next half an hour has some very brisk moves. So it could be interesting to see though.
Absolutely, and that's something that we'll wait and watch out for the next half an hour. But like I said, it's time to slip into a very quick break. On the other side, we'll get you top buy today and sell tomorrow call. So do stay tuned.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Back with India Market Close right here on NDTV Profit. Now, a conversation up next is with somebody who's had about 50 plus strategy meetings in the month of July with clients and funds across Mumbai, Chennai, Hong Kong and Singapore. And I think the takeaways from some of these could be very important from an investing framework setup perspective. Gautam Duggar, who's done all of these meetings, head of research at Motilal Oswal Institutional Equities, with us on the show. Gautam, good having you. Thanks for taking the time out. I hope all is well. Now, before we get into the nitty-gritties, Gautam, simple सवाल ये है, meetings के बाद mood bearish है कि bullish है?
Hi Neeraj, good afternoon. Thanks for having me. I wish I had the black and white answer to that question because the kind of market that we are in, it has left everyone perplexed. Last 12 months you've gone everywhere and ended up nowhere. We are at the same Nifty level today, virtually where we were 1 year back, despite all that has happened in this world. Geopolitics, tariffs, war, all sort of things have happened. The moot point is that the market broadly respects corporate earnings. It's very much evident. Last 12 months, your earnings growth was very tepid. You hardly got a flattish earnings. Markets have also been very flat. Of course, there have been stock-specific, sector-specific, returns which people would have met. but at an index level, we've done nothing. Right? As we move forward, there is a hope that earnings will recover a little bit given the steps that the government and RBI has taken, and therefore the markets will find new legs to run on once we are into the second half. That's the usual hope that we always have when earnings don't come, that first half many second half will come, and festive season will bring some cheer, and then earnings will recover and hopefully the markets will pick up. But yeah, I mean, the mood is very, very balanced. There's neither too much bearishness because liquidity is not allowing the market to fall. For 6 months you got $43 billion of domestic money. Last year CY24 was 63. So between 18 months, you got almost $105 billion of domestic capital. Against that, foreigners have sold close to $8 to $9 billion. And you've seen a lot of supply also through QIP, blocks, IPOs. So market has treaded water, not gone anywhere, and it's waiting for earnings to pick up.
So Gautam, here's the question, right? With all that has happened, the capex push, everything else that has happened on the fiscal side too and the monetary side, right? What's the case for a 5% earnings growth? I mean, why should earnings growth be only 5% considering that it's not that FY25 was a gangbuster year, right? It was a very, very ordinary year. Why should the market only grow 5%?
So no, our expectation...
earnings, I mean, sorry.
Yeah, absolutely. Our expectation on earnings is 10 to 11% for Nifty for FY26. In the first half of earnings season, that is till yesterday, we already cut the forward earnings by 1.5%. So we are down to 9.5%, 10% earnings growth for FY26. If we see the things picking up in the second half, hopefully there will not be any more cuts. But Neeraj, please understand sector by sector. You have two big sectors, banks plus IT, which contributes anywhere between 45 to 50% of the Nifty profit pool. And they are not doing much, especially large cap IT has literally thrown in the towel at 4-5% earnings growth. Banks, because they've had a phenomenal last 6-7 years. I mean, I never tire of pointing out that in FY18, the total banking profit pool or financials profit pool for our coverage universe was 49,000 crores, which in FY25 became 4,93,000 crores. Now, on that base, with best of the asset quality behind and incremental credit cost not helping much, and your credit growth still trending in 10-11%, and at the margin you have rate cuts, so clearly the pressure on NIMs, the pressure on PPOP growth, very much evident there. First half, in fact, we're expecting banking earnings to be down, right? So two big sectors not helping the cause. Then you have consumer staples, where you've seen some of the results which have already come in Asian Paint, Nestle, Colgate. Earnings have declined for all three, right? So clearly 3-4 big sectors are not firing. That's the case for this quarter. And our expectation for FY26 is also that the big sectors will find it very difficult to grow. You can add auto in that, right? Even though auto we've turned more bullish versus where we were 3 months back. But the fact of the matter is whatever 10-11% growth that we are penciling in, it is coming from small sectors like cement, capital goods, a little bit of consumer durables, EMS, pharma. But the big sectors are not doing much. The likes of banks, IT, consumer, auto, they are not firing. And commodity, where the expectations are very high, you never have visibility there beyond next 3 months because the underlying commodity prices play a huge role in deciding the commodity earnings. So the construct of the index is such that, while you would scoff at 10% earnings growth number 2, but that's the kind of reality that we are right now living in with sector-specific nuances and context deciding the trajectory of index earnings.
Mr. Dugar, hi, Mahima this side. While I was going through your note, you've said that both value and growth investors are going to find it tough. So my question to you is that generally when one goes and picks a stock, there are certain traditional qualitative and quantitative attributes that one looks at. That is your return on capital, pricing power, management quality, etc. But considering that it's going to be tough for both of these kind of investors, when you're saying that one needs to be very specific when it comes to picking up stock, what would you focus on when it comes to your term as stock picker in this market?
So Mahima, look, we all have been used to this term, stock pickers market, bottoms up market, the very cliche terms. But the reality of the market is this market has become a stock pickers market because the growth is very modest, right? And the dispersion of earnings growth within the sector and across the sector is very high. I mean, if you chosen a right sector but a wrong stock in that sector, you not made money. I mean, IT being a very clear case in point for last 3 years. If you are positive on IT but we are concentrated on large cap IT, you made nothing. You know, Infy, TCS, they've done nothing last 3-4 years on a compounded basis. But if you had positions in Coforge, Persistent, Hexaware, all of those stocks, you outperform significantly. That's the case for consumer too. If you are in consumer staples and not in consumer discretionary, your portfolio would have underperformed. So sector after sector, you're finding those divergences both in stock price returns as well as the earnings growth, right? So what we do, I mean, what do we do? What did we do in our model portfolio a couple of weeks back? We've increased the allocation of mid and small caps in our model portfolio. In April, we had 76% allocation to large cap. Today, we have brought it down to 69%. And again, when you talk about mid caps, it's very misleading to talk about aggregates or index. Mid caps are generally bottoms up and very company specific factors. So, I mean, if I were to tell you that we are expecting 19% earnings growth today for our mid cap coverage universe of 100 stocks in an environment where nominal GDP is going to grow at 9%, it is very difficult to marry the two arguments. But then in mid caps, you have very specific company specific nuances and factors which are at play. So what we've done in every sector barring banks, we've increased our allocation to mid cap. So we've removed Hindustan Lever. First time we have zero consumer staples weight. We've reduced weight on Reliance. We've removed Trent. We've removed Tata Steel. We've removed ABB, right? We've doubled weight on Suzlon. We've added Radico Khaitan, Jubilant Foodworks. Some of these niche names across categories, like we've added Jindal Stainless in place of Tata Steel. So the approach is to focus on mid and small caps, so the earnings growth is going to be slightly better. And therefore, despite expensive valuations of mid and small cap indices, if the growth differential is 2x between large and mid cap, which is what we expect this year to be, large cap at 8 to 10% growth and mid cap at 20, then this valuation premium could sustain. That's the hope. And of course, we are also banking on the fact that the domestic money keeps pouring in. Of course, that's not a very, you don't make an investment case basis liquidity. But yes, if the liquidity is bountiful, it obviously helps the matter when you're talking about mid and small caps. That's been the case for last 2-3 years. So combination of earnings growth, growth visibility, and every sector you have to go stock by stock. And then you obviously hope that those earnings don't get downgraded. That's the approach we followed in our model portfolio construction this time. Net, we have increased the component of mid and small cap in our model portfolio by 700 basis points versus where we were in April 2025.
Okay, Mr. Dugar, thank you so much. That's very insightful. And it's interesting when you said that, despite of expensive valuations, earnings could be better in the mid cap and the small cap space. Thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. It's interesting, we've always talked about bull and bear. I think we need to find a third animal which says it's a neutral set of market that we're looking at. And that's been the case for markets for a long time now. But time for our bull and bear segment. The stock in focus today is Triveni Engineering, which saw a revenue uptick in Q1 earnings. But overall, the kind of moves that we have stock, it's cooled off, of course, a tad bit, but the stock is still seeing a downtick of around 6% in trade today. We have Varsha joining us with a bull and a bear case on this particular counter. Varsha, what are you picking up?
Well, thank you for that. So yes, overall weak set of numbers is what Triveni has posted, and that's the reason you're seeing pressure in the stock. Though there was a revenue uptick which was led by alcohol dispatches and good sugar realization and of course consolidated sugar dispatches. But if you see margins were lower. Now this is due to rise in other expenses and employee expenses. So though there was a revenue growth, but the operating profit did not do well when it comes to Triveni. If I were to talk about the segmental side, how each segment performed, if you see sugar revenue grew 17%, which was led by good volumes and good realization when it comes to sugar business. But sugar PAT, if you see, was down 80%, and that's one of the reasons why overall on a consolidated level, if you see, the PAT was down 95% because your sugar PAT is down 80%, which was due to higher sugar cost. Then if I were to talk about the alcohol business sales volume grew 53%, but the average realization for the same was down 2%. So So onto the segmental, if there is a positive point, there is a negative point too, and that's the reason why overall the numbers were not good. On the power transmission business, if you see, the order book grew 15%, which is a good one, but the revenue on the same fell 8.2%, and the profit before tax fell 33%. Water business, if you see, closing order book grew 31%, which was again a good thing for the company, but if you see, order inflows declined almost 58% for water business. Onto the valuation side, if I were to talk about, on the good side, if you see 1 year forward PE, and now this is according to Bloomberg Standard, around 15 times, which is in line with the 5-year historical average that the company has seen, but current PE is at 90% premium when it comes to 5-year average. So overall, the current valuations are also high, and overall, if you see the weak set of numbers because of the not good performance when it comes to sugar business, and that's the reason why on the consolidated level you're seeing pressure on the financial numbers. Lastly, on the street cred, if I were to talk about, there are 3 buys, 1 sell and 1 hold, while the return potential for the overall business stand at around 43%.
Thank you so much, Varsha, for bringing us all those details. It's the sugar segment that's kind of weighing on the counter. Let's also welcome in Shivangi Sharda of Motilal Oswal and Amrish Baliga, independent market analyst, joining us now. Good afternoon to both of you. Amrish, I'll come to you first. Your view on Triveni Engineering. It's a sugar segment that's been an overhang for the counter, down 6% today. If you had the chance to see the numbers, what's the view like?
No, in fact, I don't track Triveni Engineering, but sugar sector overall, I would still continue to be positive, especially looking at the way ethanol growth is happening across the sector and the sort of margins which they're making on ethanol. My best pick in this sector clearly is Balrampur, which is among the larger ones in this space.
Okay. Shivangi, are you taking any trades on the indices per se, or are you sticking to stocks ahead of the Fed meet?
Very good afternoon. Thank you for having me. So we've of course seen that the bulls have come back in action, and we are seeing consolidative phase, but overall there has been good support taken from the lower levels for the indices. Overall, of course, we are heading into some global cues which could affect the market opening. But I am, seeing that overall the derivatives data points are showing some sort of positiveness. Of course, there's monthly expiry tomorrow, so volatility will be expected ahead of, the monthly expiry. But overall, we are kind of going for buy and decline strategy with next immediate targets of 25,000 and then 25,200 with a support of 24,700 levels on an immediate basis for this July series expiry.
Shivangi, your picks for this afternoon?
So stock specific, I'm looking at PI Industries, which has given excellent follow-up after the breakout of the consolidation. And it's taken support exactly at its 50 daily exponential moving average. In fact, even on the monthly basis, it has been making higher top, higher bottom from the last 4 consecutive months. We've had, this stock closing in green month-on-month basis. So definitely strength lies here. And the kind of follow-up that we're seeing in today's session and the kind of closing that we are heading into for this stock clearly indicates that momentum is to continue even for the next few sessions. So recommending a buy here with a target of 4,500 levels and a stop loss of 4,250. So.
Okay. There were some flashes on BEL, right? That they are in the, development phase of the Kusho project and a clutch of other things that they have mentioned. They have received some emergency procurement orders as well, which is a good sign, and a clutch of other things that have come out on the con call, even though the stock is absolutely flat, Mahima.
I think the orders that you're talking about are worth 550 odd crores. Major orders from Optronic System for aircrafts and other is what the exchange filing is also saying. In terms of the overall con call highlights also, I think the stock is not reacting much to that. If I'm trying to pull the lines up, overall margins have been at 27% in line with what the guidance was. Gross margins higher due to better composition of product mix is what the management is saying. In the next 3 to 6 months, they're expecting considerable subsystems order from the shipbuilding side is something that's being highlighted in the con call. But some of the stocks which are buzzing on the back of Q1 earnings are Tips Music, New India Assurance and Gallant Ispat. Vansh is joining us with all the details on these three counters. Vansh, what are you picking up?
Right, so the first on my list is Moil. Now the company has reported a set of numbers. The numbers are muted on all the fronts. There has been a sharp cut in the margins and the profit has been dragged by the weak operational performance from the company. And the mining revenue has declined 20% on sequential basis, and the revenue from manufactured products has also declined 19% on sequential basis. If we talk about the financials, the revenue is down 19% at 348 odd crores versus 433 crores. EBITDA is down 43% at 79 crores versus 140 odd crores, and the margins are at 22% versus 32.2%, and the net profit is down 55% at 51 crores versus 116 odd crores. Second on the list is Gallant Ispat. Now the stock is trading at its all-time high, and the profits have been surged to 174 odd crores, and the profitability is being driven by the improved margins and the operational performance from the company. Third on the list is New India Assurance. Now, yes, there has been an unfortunate incident involving the Air India flight, and this has adversely impacted the results of the company. The Q1 premium is up 13% to 13,300 odd crores, and the health segment experienced a higher loss ratio for the company. So these are some of the stocks that are buzzing in trade today.
Yeah, well, serious moves there. Vansh, thanks so much for that. Serious moves for New India Assurance. Amrish, I don't know if you got a chance to look at these numbers, but 18.3% higher is the stock now at the high point of the day.
No, that's true, but at these levels, I'll not really buy it, buy fresh into that, because clearly the losses are going to hit them sooner than later. I mean, although the premiums are much higher than what we saw last year, but then I think it's already there in the price. So at these levels, I'll not really buy fresh.
Okay. For people who are tuning in right now, amongst the key movers is also Avenue Supermarts. We spoke earlier on the show about it, but Amrish, you would have definitely looked at this. Good to invest into from a 2-3 year perspective, or would you choose some other retail outlet or maybe the online retailers?
I think the online retailers could be the ones to be looked at, because DMart, like Avenue Supermart, has already played out. I mean, they were one of the best sort of players like about 8-10 years back. And I think that's played out post the IPO. But what we are seeing in the last couple of quarters is that the same store growth is not really picking up. I mean, the growth is coming from more of new stores. And again, in the like overall, if you see the sort of margin pressure which is there, especially on the textiles side of that, because the margins normally come from the textiles and I mean home apparels sort of a business, where Zudio has taken the lead, and that's affecting Avenue Supermart. So I mean, at these levels, again, I'll not look at buying it. In case people have and been holding for a long time, I think it's a good time to start booking profits.
Good time to start booking profits. Okay, that's not the case that investors are probably doing today. It's completely a buy situation. They're up 7% almost, where Avenue Supermart stands. But another gainer, and that's the top gainer on the Nifty 50 today. That's L&T on the back of its earnings. Now, revenue in line, net profit did beat estimates on account of higher other income as well. Order inflows remained robust, up 33%, as well as order inflows aided the strong traction in hydrocarbon business in Middle East. Order prospects pipeline also raised 63% YOY to almost 15 lakh crore, and net working capital has declined 10%. In terms of guidance also, management maintains the FY26 guidance. Order inflows expected to grow around 10%, revenue to grow around 15%. Core margins expected to be in the same range of 8.3 to 8.5. Order book outlook, they've said that overall order prospects raised to 15 lakh crore for remaining 9 months of FY26 is what the management has said. Brokerages have fairly, maintained the target prices or maintained their stance. But Shivangi, I'll come to you on this one. On the charts, how is L&T faring?
Of course, this has been the star performer of the day, and you've seen that there has been over 20% shorts that have been covered in today's session itself. So overall, the stock is, poised for a good up move here onwards. But we've seen that on a weekly basis, it's wiped off its entire losses of the last 4 weeks, and on month basis, it's now coming to be positive. So, very sharp comeback of the bulls in the last two sessions. Of course, we've moved a lot in the last 2 days. So, till the time the stock holds above 3600, then we could expect the momentum to continue towards 3800 levels. But 3600 will be an important support to watch out, which will be a make or break zone for this one as well.
Okay, and meanwhile, on the earnings call, L&T CFO Shankar Raman addressed the margin outlook for Middle East projects, highlighting that the company sustains a 20 to 25% win rate with repeat customers. Listening.
If we can get a sense in terms of margins that we can have over these next 2 to 3 years in terms of improvement. Along with that, just wanted to understand the overall win rate that you have in these Middle East projects. If I'm not wrong, according to the last con call, 20 to 25% is the range that you have.
Yeah, that's right. 20 to 25% is the win rate. And increasingly, I think the more successful we are in completing projects and handing over to the customers, most of the customers are repeat customers, as you might know. So to that extent, I think the customer confidence and the customer intimacy increases. Margin is a function of point in time execution matter. Very difficult to say, no, we'll make 10%, 11%, 12%, etc. Sitting far away from the date on which you have to complete these projects. It also depends on the level of competition, which keeps on changing in a year-on-year basis. And it also depends on the type of projects, because just as I spoke in the context of our boiler turbine capacity being almost full up, most of the equipment suppliers and suppliers globally are also quite full up. So to that extent, I think the time it will take to source the equipment, the cost at which we will be able to influence the pecking order in terms of delivery, etc., all of that will have a play in margin. Directionally, I can tell you that if the growth continues the way it is, the margins will improve.
Okay, some active movers: Transrail, Sumitomo Chemicals, Omax Auto. There are some stocks which are actually doing well for themselves. 5% higher for Transrail. Beautiful chart there, by the way. But look at Sumitomo Chemicals. That's been a trending mover, up 8%. Omax Auto too has had some fabulous moves in the session today. So keep an eye out for some of these. Shivangi, any thoughts here? I mean, Omax is up 20%, so I don't know how much, but good volumes there, by the way, 4.5 million. But Sumitomo Chemicals, Omax, etc. Any thoughts here?
Now, of course, these stocks have done quite well in the last two trading sessions. And in fact, this entire space has got a little bit of, sector tailwind, which has helped most of these stocks in this counter. But, looking at this stock, we've obviously surpassed its previous hurdle of 618 levels. And till the time it manages to hold above 650 levels, we could see an upside towards 680 odd zone. So this would be the take on this one.
Okay. What else? Well, we've spoken about the key winners, of course. I think the losers include a Reddington, which Mahima highlighted earlier. A Zentech, JM Financial is corrected a little bit, and Tata Motors is closing in at the day's low. So, well, okay, quick question to both Shivangi and Amrish. Shivangi, if somebody was short Tata Motors this morning, go home with the short positions?
So looking at auto space, these stocks haven't moved much off lately, and we've seen Tata Motors has broken a important support of 670. So I think there is room for a little more downside over here.
And Amrish, since a lot of auto names came out with numbers, I'm inclined to ask you, any that you're watching out for in terms of results or maybe an investment case?
No, I mean, I would surely talk about Tata Motors. I mean, like normally, whenever we have seen huge investments being made, I mean, we have seen that correction. But then, I mean, we have seen what's happened to the JLR deal. I mean, from where the performance has improved so much from where it was. I don't think one needs to be so afraid of this Iveco deal. So in case we see Tata Motors correcting to levels of about, say, 640, 650, I think it's a good time to buy from a longer term perspective.
Interesting. Okay, Amrish, thank you so much for joining in today. Shivangi, thanks to you as well for taking the time out and being with us and giving us your ideas. Really appreciate your time. As we start wrapping up the markets, over to Mahima. And Mahima, flat day and flat close.
Absolutely, flat day and flat close for sure. The Nifty 50 in the same range as to where we started the show at. Same with the Bank Nifty, pretty much flat and hovering. In fact, Nifty back slightly has come down, but Nifty 50 in that same range of 24,850 odd levels. Let's also take a look at the Nifty heat map. Probably the same picture there as well. L&T leading the chart, up 4.6%. Sun Pharma, Tata Consumer, NTPC, Maruti Trend, some counters doing well in trade today. Tata Motors seeing significant amount of pressure, and that pressure has continued throughout the day, down 3.5%. For Hero Moto, Power Grid, Bajaj Auto, a lot of auto names under pressure. Eternal sees some losses today in terms of the counter, down by about 0.7 odd %. Let's take a quick look on at the advanced decline ratio, because the broader end of spectrum, there's lots happening because of earnings. So there you go. It's come down to 1:1 almost, because narrowed down to that end. 1100 odd declines, 1100 odd advances versus 1000 odd declines. So that's where the advanced decline ratio stands. Let's also pull up the sectoral heat map and see the sectors. Nifty Infra continues to see the gain. Nifty IT has inched up 0.24 odd %, 2.22 odd %. FMCG seeing gains of about 0.2 odd %. But overall, Nifty Realty continues to be under pressure, down by about 1 odd %. Nifty Media down 0.8%. PSU Bank also down by about 0.7 odd %. Let's also take a quick look at the broader markets, the mid cap 150 and the small cap 250. There you go. Mid cap 150 seeing gains of about 0.12 odd % and the small cap 250 down by about 0.14% at its day's low point as we close for the day. Let's take a quick look on the BSE 500 and the counters that have seen gains today. Birla Corp, Reddington down 7 to 8 odd % on the back of earnings. 5-Star down 5%. Blue Dart also down by about 5 odd %. But a few gainers on the flip side. Avenue Supermart stealing the show, up 7%. New India, top gainer throughout the day, 17% up. Sumitomo Chemicals up 7%. Jubilant Pharma as well as Craftsman Auto seeing gains of about 6 odd %. But what to watch out for tomorrow? Let's try to pull that up. Couple of things, of course, US Fed press, the most important thing to watch out for, the kind of commentary that will come in. There's also Japan industrial production data that will come out, corporate actions, dividend for all of these companies, V-Guard, IG Petrochemicals, TTK, Prestige, and there is also Pratap Snacks and United Breweries that will trade ex-dividend tomorrow. This is an important one. Shares to exit anchor lock-in. Ather Energy around 6% lock-in ends tomorrow, so movement in that counter could also be seen. Post-market hours, some important earnings. M&M that changed their earnings to today. Tata Steel, a big one. Interglobe, a big one as well. IGL. There's also V2 Retail to watch out for, and something like a PTC India, Indus Towers, big names, Sagility India to watch out for. But earnings tomorrow to keep your eye on. Coal India will be a big one. Dabur will be a big one. HUL, another big one. Some big names in auto as well as FMCG will come out. In terms of auto, there will be TVS Motors, Maruti Suzuki, as well as counters like Eicher Motors will see their earnings. FMCG will have Dabur, HUL, as well as Radico Khaitan and Swiggy come out with their earnings. So big day of earnings for sure tomorrow. Now, in terms of the Trump tariff situation, can indeed be seen as a classic example of game theory, says Arvind Virmani, a member of Niti Aayog, in an exclusive conversation with NDTV Profit's Shrimi Chaudhary. He points out that this is a strategic move to shape how others perceive the situation rather than a fixed policy decision. Listen in.
So actually thinking about it in those terms illuminates this, what seems to be is classic game theory. Okay, so the statements are designed to increase credibility of the harm. Okay, and so one should not I don't want to comment on the specific things, because that's the whole point of negotiations. It's all about changing the perceptions. It's all there in game theory, actually. Okay, so two things I would say. We should not weaken the case of our negotiators. Okay, by supporting and opponent's game theoretic moves. Okay? So don't believe everything the opponent says.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So Nifty ended a choppy day of trade today above 24,800 levels. Sensex managed to gain over 100 points. Top gainers from the Nifty FAC include L&T, Sun Pharma and Tata Consumers. It was a mixed bag for sectors as well, with most sectors in the red than green. Realty, Media and PSU Bank were the top laggards. Autos were also in the slow lane, while IT, defense and consumption were resilient in trade. The Indian rupee slumped to a 5-month low, closing 61 paise weaker at 87.43 against the US dollar today, down from 86.82 on Tuesday, marking its lowest level since February 28. So the sharp decline was driven by heavy dollar demand from importers and fears of US tariffs under President Trump, which could hit 20 to 25%. KPIT Tech saw its stock rise 5% today despite a challenging Q1, with net profit dropping 29.8%, nearly 30% to 172 crore rupees from 245 crore rupees year on year, impacted by a 65% fall in the other income and a 5 crore loss from its joint venture. So revenue grew marginally by 0.7% to 1,538 crore rupees, marking 20 quarters of growth, but margins slipped to 15.4% from 17.3%. Asia revenue fell 8% and exchange losses hit 24 crores. So still KPIT secured $241 million in the deals. Allied blenders and distilleries delivered a blockbuster Q1 with net profit surging fivefold to 56.6 crore rupees from 11.2 crore rupees year-on-year, marking its fourth straight quarter of robust growth post the IPO. So revenue has climbed 22% to 923 crore rupees, fueled by strong volume growth in the prestige and above category. EBITDA also soared 50.5% to 112 crore rupees, with margins expanding to 12.1% from 9.8%. Now, thanks to the smart supply chain moves there. P&G Hygiene and Healthcare delivered a stellar Q4 with net profit skyrocketing to 137%, climbing to 192 crore rupees from 81 crore rupees year-on-year. So this is actually driven by robust feminine care sales. Revenue also edged up 0.6% to 937 crore rupees, while EBITDA surged to 266 crore rupees from 118 crore rupees, boosting margins to 28.4% from 12.7%. So the company behind brands like Whisper and Vicks saw gains from cost efficiencies and premiumization despite muted industry volumes. Avenue Supermarts, D-Mart's parent, remains confident in its brick and mortar model despite quick commerce pressure, as shared in its recent conference call. So the company sees steady customer demand across the segments, not just the middle class, but D-Mart is also already targeting less price sensitive shoppers as well. So D-Mart plans to counter competition by accelerating store additions at 10 to 15% annually, doubling down on investments without chasing 30-minute deliveries, prioritizing value instead. So financial metrics remain stable, and the company is enhancing services in the cities with aggressive quick commerce presence to boost the customer experience. Coromandel International stock hit a 52-week high after a strong Q1. Robust demand for fertilizers and crop protection products fueled growth. Strategic moves like stake hikes and new agreements boosted confidence. The company expanded its agri-retail network significantly. L&T posts strong Q1 profit growth, beating the estimates. Revenue rises 15.5% year-on-year, which is in line with the expectations. So margins have dipped slightly due to energy and high-tech segments. And there's a robust order book, order inflow as well at 94,453 crore rupees. Order book hits 6.12 lakh crore rupees. LSID Investments invest 7.5 crore rupees in Zepto for a 0.0146% stake. So deal structured via compulsorily convertible preference shares, Zepto valued at nearly 60,000 crore rupees. FY25 turnover hits 11,109.9 crore rupees. This move actually signals growing investor interest in the quick commerce space. Tilak Nagar Industries to raise 2,296 crore rupees via preferential issue at 382 per share. So funds will support 4,150 crore rupees of acquisition of Imperial Blue from the Pernod Ricard. So Chairman Amit to invest 306 crore rupees via warrants, and a company gets LOI, which is a letter of intent, extension to expand Andhra Pradesh bottling unit by 200 lakh proof liters. GAIL and RRVUNL Inc. JV to bundle gas and clean energy assets. So JV is to set up 750 megawatt of solar and 250 megawatt of wind projects in Rajasthan. So 330 megawatt gas-based plant to be transferred to the new entity. Now both the partners to hold equal 50% stake in this venture. Cyient sets up a new semiconductor unit in Singapore under its subsidiary. The entity will focus on engineering design and consultancy services. Move aligns with Cyient's push into the high-performance ASIC and chip design. So Singapore hub to support global clients with turnkey semiconductor solutions. Triveni Engineering posts 23% revenue growth in Q1, led by strong sugar and distillery sales. Alcohol dispatches surged 53% despite top-line growth. Margins shrink due to higher operating and employee cost. So net profit plunges 94% year-on-year to 2 crore rupees. EBITDA also down 38% year-on-year. Ask Automotive posts solid Q1 performance with margin expansion and profit growth. EBITDA margin improves to 13.4%, driven by scale, facility ramp-ups, and cost cuts. So wheel assembly business strategically reduced by 53.5% to boost the profitability. Net profit also rises 16.3% year-on-year to 66 crore rupees. Revenue is also up 3.4% year-on-year. HSBC initiates buy rating on Ather Energy with a target price of 450 rupees, backs Ather's strong product quality, tech edge and expanding distribution in a challenging EV market. EV penetration remains slow, but HSBC sees stock performance driven by Ather's relative strength, not sector growth. So EBITDA break-even expected by Q4 of FY27. Faster EV adoption could actually boost the earnings and valuation. Sterlite Technologies aims for 18 to 20% EBITDA margin in FY26. So higher factory utilization will drive this growth. The company plans to boost capacity from 45 to 50% to over 70%. So it also focuses on reducing debt for stronger finances as well. Swiggy is set to report its Q1 of FY26 results on Thursday, which is tomorrow. So brokerages predict strong revenue growth of up to 54%. Losses are expected to narrow, aiming for profitability by late 2025. Food delivery and Instamart drive the positive outlook. Asian Paints reported a 6% drop in Q1 of FY26 net profit to 1,100 crore rupees, aligning with the estimates. Despite a 3.9% volume growth in its domestic decorative paints business, revenue has dipped 0.4% to 8,939 crore rupees due to the early monsoons and product mix shifts. So EBITDA has fallen 4.1% to 1,625 crore rupees with margins at 18.2%. So the international business grew 8.4% in the value, led by Asian markets and the UAE. So home decor saw degrowth with kitchen and bath segments down 2% and 5%. Automotive and protective coatings showed double-digit growth, signaling resilience amid competition. Dilip Buildcon Limited's Q1 of FY26 consolidated net profit surged 91.6%, which is nearly 92%, to 229 crore rupees from 119 crore rupees. So this is driven by a 169 crore exceptional gain and 216 crore rupees in the other income, which is up from 20 crore rupees. So revenue has fallen 16.4% to 2,620 crore rupees due to muted EPC activity. Now, this is marking the fourth straight quarter of decline. EBITDA has risen 8.9% to 520 crore rupees, with margins expanding to 19.9%, which is nearly 20% from 15.3%, aided by a 21% drop in the operating expenses. So the order book stands at 13,695 crore rupees, which is down 8% quarter on quarter, with a book-to-bill ratio of 1.2 times. Tata Motors is set to acquire Italian truck maker Iveco for $4.5 billion, its largest deal till date. So this is surpassing the 2008 Jaguar Land Rover buyout. So the deal involves purchasing a 27.1% stake from Exor, the Agnelli family's investment firm, with a tender offer for remaining shares. So Iveco's defense business, valued at up to 1.9 billion euros, is excluded as it's being spun off. So the acquisition, expected to be finalized soon, aims to boost Tata's global commercial vehicle presence. Iveco's shares surged 7.4% amid the news. Northern Arc Capital reported a 13% year-on-year increase in the Q1 of FY26 lending AUM to 7,142 crore rupees from 6,313 crore rupees. This is driven by the growth in the consumer finance and MSME segments. So net interest margin has slightly dipped to 8.9% from 9.1%. The company trades at 0.8 times FY27 price to book, reflecting attractive valuations. Northern Arc targets net NPAs at 0.5 to 0.7%, with ROA of 3.7 to 4% by FY28 and ROE of 16 to 18% over the 3 years. So despite a 12.9% year-on-year PAT drop to 81 crore rupees, management remains optimistic about the 20-25% AUM growth, leveraging technology and risk management. Nilkamal stock slumped 7% after reporting a 17% year-on-year and 15% quarter-on-quarter decline in the Q1 of FY26, which is the consolidated net profit also drops to 15.33 crore rupees from 18.34 crore rupees year-on-year and 34.2 crore rupees quarter-on-quarter. So revenue has risen 18.9%, which is nearly 19% year-on-year, to 883 crore rupees. This is driven by 19% B2B and 22% retail segment growth. However, the margins have faced pressure from 20% higher finance and other expenses. Joint venture profits also grew 24%. Siaram Silk Milks Q1 of FY26 net profit plummeted 60% year-on-year to 4.64 crore rupees from 11.5 crore rupees, dragging its stock down 5%. So revenue has risen 26.9% to 389 crore rupees, but flat retail demand and early monsoons hurt the sales. So operating expenses surged with finance costs and depreciation also up 43%, which is this has led to squeezing margins to 5.34% from 15.11% quarter-on-quarter. Now, other income has also fallen 50% to 1 crore rupees. Now, despite the opening of 4 Z-Code and 3 Devo stores, losses from the new formats persisted. So the company aims to open 35 stores by March 2025 to boost its growth. Meghmani Organics staged a strong comeback in Q1, swinging to a net profit of 12.7 crore rupees from a 16.8 crore loss last year. Driven by robust demand in agrochemicals and pigments, revenue soared 48.3% to 614 crore rupees from 414 crore rupees, fueled by higher volumes despite softer price realizations. EBITDA jumped to 66.9 crore rupees from 5.9 crore rupees, with margins expanding to 10.9%, which is nearly 11% from just 1.4%. So the company's strategic cost controls and expanded export markets, particularly in the US and Brazil, powered this impressive recovery. Vedant Fashions, the parent of ethnic wear brand Manyavar, reported a solid Q1 with net profit up 12.5% to 70.2 crore rupees from 62.4 crore rupees year-on-year, driven by strong wedding season demand. Revenue grew 17.2% to 281 crore rupees from 240 crore rupees, fueled by robust retail and franchise expansion. EBITDA rose 6.9% to 120 crore rupees, though margins dipped to 42.8% from 47% due to higher marketing spends. So the company focuses on the premium ethnic wear, and new store openings continues to boost its market presence. A family dispute within Sona BLW has taken a serious turn, with the company issuing a cease and desist letter to Rani Kapoor. The letter alleges that Kapoor has defamed the company, causing reputational damage. While the letter was received on Monday, sources say that Rani Kapoor camp has yet to decide on how to respond. Now, sources tell NDTV Profit that the Reserve Bank of India is poised to unveil a new liquidity management framework, likely in its August policy meeting. The central bank may shift its liquidity operations to center around the 7-day variable repo rate. RBI Governor Sanjay Malhotra is said to be prioritizing stability in the overnight rate. Schneider Electric will acquire Temasek's entire remaining 35% stake in their India joint venture for approximately 55,000 crore rupees in an all-cash deal. So this move will actually give Schneider Electric full ownership of SEIPL, which is its third largest market globally. The company said that this deal is expected to accelerate decision-making and growth. The company anticipates double-digit organic sales growth for SEIPL in the coming years. Microsoft Corp has restored all services to Nayara Energy just ahead of the scheduled Delhi High Court hearing over the suspension. So the restoration follows legal action taken by Nayara, which is backed by Russia's Rosneft, after Microsoft abruptly suspended its services in response to the recent European Union sanctions targeting the Indian refiner. So Nayara argued that Microsoft's move, based only on EU sanctions, had no legal basis under US or Indian law. The NSDL IPO worth 4,000 crore rupees has been fully subscribed within 3 hours of bidding. The retail and non-institutional portions along with the existing employees of the NSDL have been fully subscribed. The portion reserved for institutional investors has been subscribed 50%. The IPO is priced between 760 to 800 rupee per share. The IPO is a pure offer for sale, meaning no fresh funds for the company. So only existing shareholders are selling the stake. Starbucks is phasing out its 90 mobile order and pickup only stores in the US, citing a lack of warmth and human connection as part of a major operational shakeup. So CEO Brian Nicole announced the move after a 2% drop in the same store sales for the 6th straight quarter. The closure won't impact Starbucks' mobile ordering service, which drives nearly a third of its transactions. Nicole's Back to Starbucks initiative aims to restore the brand's cozy coffee house vibe. In a fiery Lok Sabha debate on Operation Sindoor, leader of opposition Rahul Gandhi launched a sharp attack on PM Modi, alleging the operation was a mere exercise to shield the PM's image after the Pahalgam terror attack. Gandhi boldly dared Modi to call US President Donald Trump a liar in the parliament, refuting Trump's claims of brokering an India-Pakistan ceasefire using trade leverage and alleging jets were shot down during the conflict. Gandhi accused the government of lacking political will, tying the hands of the armed forces during the operation. BJP leader K. Annamalai is not likely to contest the Tamil Nadu Assembly election scheduled to be held in 2026. Sources indicate that he's likely to get a role in the central government and will not contest the Tamil Nadu polls. So detail on his exact role is not clear and is awaited as of yet. So speculations have arisen whether it could be in the Rajya Sabha. Assamese actor Nandini Kashyap has been arrested in Guwahati in a hit-and-run case. According to Guwahati police, the incident took place around 3 a.m. The victim is a 21-year-old student who is a part-time worker for the Guwahati Municipal Corporation. He was allegedly struck by a speeding Scorpio. Eyewitnesses report that Kashyap did not stop after the collision and fled the scene, leaving the injured student behind. The first waves triggered by a massive 8.8 earthquake off Russia's coast have reached Hawaii, with a 4-foot wave recorded off Ohio. People in Hawaii, some parts of the US West Coast and Japan have been told to evacuate after one of the strongest earthquakes in the modern history has hit Russia's eastern Kamchatka Peninsula. Now a closer look at the earthquake I just mentioned about. A massive 8.7 magnitude earthquake struck off Russia's Kamchatka Peninsula, prompting tsunami warnings in Russia, Japan, Hawaii, and the US West Coast. So waves up to 4 meters hit parts of Kamchatka. Japan expects waves up to 3 meters. Evacuations were ordered in coastal towns. Damage reported in Kamchatka, including a kindergarten. The quake occurred at a shallow depth of 19.3 kilometers, increasing tsunami risk across the Pacific Ring of the Fire. President Donald Trump signals a possible 20 to 25% tariff on Indian goods as trade talks remain unresolved ahead of August 1 deadline. He says that India imposes higher tariffs than most countries despite calling it a good friend. Negotiations continue, but key issues like agriculture and digital trade stall progress. So India prepares for higher levies and plans to resume broader talks in mid-August. Manchester City have made waves by re-signing their former academy goalkeeper James Trafford for a record fee for a British goalkeeper. The 22-year-old, who never made a senior appearance for City before his 2023 move, returns on a 5-year deal after a stellar championship season, keeping 29 clean sheets. Now, this was Pep Guardiola's 6th summer signing. At the World Aquatics Championships in Singapore, American legend Katie Ledecky dominated the women's 1500-meter freestyle swimming, clinching her 6th world title in the event with the 5th fastest timing. She now holds 22 World Championship golds. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere as there's more more action lined up ahead.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Benchmarks end higher to slightly outperform the mid and small cap indices as Nifty reclaimed the 24,800 mark. Sectors end mixed with Nifty Realty as a top loser while IT gains the most. Rupee closes at a 5-month low against the dollar to end 61 paise lower at 87.43, lowest since the 28th of February. NSDL's 4,000 crore IPO fully subscribed on day one. Qualified institutional buyers lead the subscription at 50%, followed by non-institutional and retail investors. Sona BLW sends cease and desist letter to Rani Kapoor claiming that she defamed the company and caused damage. Rani Kapoor is yet to respond. NSDL's 4,000 crore IPO fully subscribed on day one. Qualified institutional buyers lead the subscription at 50%, followed by non-institutional and retail investors. Sona BLW sends cease and desist letter to Rani Kapoor claiming that she defamed the company and caused damage. Rani Kapoor is yet to respond. Hawaii and parts of Japan lowered tsunami warnings. These warnings were issued after a very strong 8.8 magnitude earthquake hit far eastern Russia. Hello and welcome viewers, a very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. To begin with, an important update on India-US trade deal. Sources say India will keep negotiations with the US running and aim for a deal by fall of this year. This even if US President Donald Trump imposes tariffs. Reports add that New Delhi is not too optimistic about securing an interim agreement with the Trump administration before the August 1st deadline when higher US duties kick in. Meanwhile, the comments last night from the US president on a likely 20 to 25% tariff on Indian goods is reportedly and understandably making Indian exporters, particularly those in the textile and engineering industries, worried about the impact of these tariffs. Let's now go across to my colleague Rishabh to understand the impact of tariff uncertainty on Indian exporters.
Right, what we're picking up from our various exporters associations is the fact that they are on the edge, given the fact that US has issued fresh threats of about 20 to 25% tariffs starting August 1st. What we're picking up is the fact that we spoke to a textile exporters body. They said they warn of about 2 to 3 months of pain for the industry that are coming in. They say they're seeing that orders are being stalled, and what they're seeing is a slowdown ahead of this very crucial annual period of festivities that is coming up. They are saying that there is a lot of orders stalling and orders not getting released. We jump now to the FIO, which is the Federation of Indian Export Organizations. These are groups of exporters, and what they also say is that there is an additional cost burden that is expected now. The industry was prepared for somewhere between 10 and 15%, but a 20 to 25% tariff increase would mean that they would have to sit for additional talks with their buyers, with brands, with companies, and they will have to decide a way to split this tariff burden, this additional tariff burden that is set to come up starting August 1st. What they're also saying is that there is a fear that instead of the BTA was supposed to get orders in from China and basically make India eat a part of that Chinese market. But what we're picking up now is the fact that there is a lot of uncertainty and orders are not coming. The orders that were supposed to shift to India are not, that is not happening. So a lot of sort of alarm bells ringing around exporters, given that this additional burden of 20 to 25% may hit Indian exporters.
Right, Rishabh. Thank you so much for that update. And viewers, markets ended in the green after Nifty reclaimed the 24,800 mark. Benchmark slightly outperformed the broader markets. Nifty IT closed as a top sectoral gainer, while Nifty Realty lost the most points. Now we have my colleague Varsha joining us with a wrap of the day's market action.
The benchmark and indices, slightly outperformed broader market indices. Now Nifty reclaims 24,800 mark and ends higher. Benchmark indices extended gains for second straight session. L&T and NTPC were the top gainers when it comes to Nifty 50. Nifty IT emerges as the top gaining sector of the day, which was led by Coforge and LTI Mindtree. Onto Nifty Midcap 150, if I were to talk about, it gained slightly, which was led by New India Assurance and Coromandel International. The New India Assurance jumps over 18% after its Q1 results, while Nifty Realty emerges as the top losing sector, loses nearly 1% intraday. Brigade Enterprises and DLF are the top losers when it comes to Nifty Realty. Nifty IT extended gains for the second consecutive day, and Nifty FMCG extended gains for the third straight day, while Nifty Pharma FEC extended gains for the sixth day in a row, and Mahindra FEC gains nearly 1% ahead of its Q1 results.
Thanks for that, Varsha. And margins in the lending business could bounce back in the second half of FY26. That's the word coming in from Pankaj Muraka, CIO at Renaissance Investment Managers. He remains bullish on the banking space, driven by strong credit demand and improving asset quality. Let's now listen in to what's fueling his confidence in this sector.
I would not be too concerned about the margin compression that we've seen in the first quarter for some of the banks, because I think given the fact that the rate cut has been front-loaded by RBI and given the way the sector is poised, where your assets get repriced much faster than liabilities, this is a matter of cycle, where you are in the cycle. So that's not too much of a concern for me. We still continue to remain positive on lenders, because we think we're coming out of 2 years of slowdown in the economy. And as I said, I am firmly in the camp that we'll start seeing gradual economic recovery in the second half of the year, and lenders becomes a good play on it. As far as asset quality is concerned, I think the top 5 or 10 lenders in India are in a very good shape. In fact, after a long time, we own 4 of the top 5 lenders in India in our portfolios. And our preference is for larger players versus the smaller players within the sector. So we own HDFC Bank, ICICI Bank, SBI and Kotak Bank. And we think all of them have very strong balance sheets. And the economy, as the economy recovers in the second half of the year, margins will stabilize in the second half of the year, and more importantly, growth will come back for these lenders. So, and more importantly, one of the few sectors which is still trading at about almost 20% discount to the Nifty index. So I think as these as we see growth coming back to the sector over the next 3-4 quarters, probably that valuation gap versus the Nifty index for the lenders will narrow.
And Avenue Supermarts isn't losing sleep over quick commerce. In its post-earnings call, the management said it remains bullish on the traditional brick-and-mortar model and sees store expansion as the best response to rising QCom competition. Let's listen in to their comment on how they plan to tackle the QCom business model and how they have been investing in key cities to sharpen customer experience.
One of the best ways to counter quick commerce is not actually really digital. One of the best ways to counter quick commerce is to have more and more DMart stores. Because from a value proposition, we have an amazing positioning. So for a value customer who's spending 5,000 or 10,000 rupees a month, she or he can clearly see that they will save significantly more when they come to the store. At the same time, yes, there is a top 20%, 25% of the population of a city who wouldn't mind paying a little bit extra to get the product delivered at home. And we're trying to bridge that gap. So let's look at it from a standpoint that at one end you have high convenience, high price point, and the other end is DMart stores, which is deep value, but obviously it's not as convenient, right? But it's deep value.
And the IPO of NSDL, India's first and largest securities depository, opened to a strong start, getting fully subscribed on day one. In fact, as of 3:33 p.m. today, the issue was subscribed 1.53 times. This is an entirely offer for sale issue with up to 5.01 crore equity shares being offloaded by existing shareholders, including that of IDBI Bank, NSC and SBI. So what makes NSDL a potential long-term play for your portfolio? We spoke to Deven Choksi, MD of DR Choksi Investment Managers, for his take on the IPO and why investors are tracking this one very closely.
I think this is a must in the portfolio.
Okay.
Couple of reasons. You already have the market cap growing from 5.5 trillion with a visibility to become 15 trillion in next 10 years to 12 years time from now. So obviously, I think the number of and the value of assets increasing and the number of transactions increasing along with, that is a good sign for any business directionally for the growth. And they're a duopoly anyway. So around 43-44% of the revenue comes from the deposit services. About 50% of the revenue comes from the payment services which they offer through their other companies, payment bank companies. And I think the database company, which is relatively small, I think with 7-8% kind of a contribution into the revenue. It is also providing, I think, a significant amount of solutions to on the e-governance, KYC and insurance depository related services. So in my viewpoint, I think with this kind of diverse portfolio that you have, including your subsidiaries, I think the business becomes absolutely, I think, a must in the portfolio, because I think this kind of businesses will only give you a chance, I think, when they come into the public market.
And in a special conversation with us, Astrotalk's founder and CEO Puneet Gupta revealed that the company plans to launch its IPO towards the end of 2026 or the first half of 2027. Let's listen into an excerpt from that conversation where he also delves into the profitability of the company.
Puneet, also talk to us about, since you've said that there is plans to go public, उस पे क्या timeline है फिलहाल?
So we have just started working on it. So अभी our CFO has joined last month, and अभी Big 4 या Big 6 auditors को हम hire कर रहे हैं, and I think that will be done. उसके बाद सारी planning करके, so the timeline which we have internally is कि 2026 के mid के बाद will file for DRHP, and IPO की timeline शायद 2026 end या 2027 के starting में होगी.
What is the profitability currently as we speak?
Profitability is around 18 to 20% is our EBITDA margin, and to last year we closed at 100 crores ka profit. Last year we closed close to, I think, 250 crores ka profit. this year, let's see where we go.
The Indian rupee slumped to a 5-month low today, closing 61 paise weaker at 87.43 against the US dollar, down from 86.82 on Tuesday, marking its lowest level since February 28th. But the rupee move has been surprising to traders. Some of them told NDTV Profit that the importers did not expect 87 mark to be breached and are sitting out of the market because of sudden pressure on rupee. Let's go across to my colleague Vishwanath Nair to join us now. Vishi, tell us, what are you hearing from the traders?
All right, so the rupee closed at 87.43 against the dollar. This was a sharp deceleration in the value of the rupee against the dollar. This is the lowest that it has been since February. This was primarily a surprise for the traders on the street who did not quite understand why the rupee was weakening so hard. Essentially, if you look at where the other Asian currencies are and where the dollar index is, there is no fundamental reason for the rupee to be weakening so much. What traders are pointing out is actually the uncertainty in the market, especially amongst the foreign institutional investors who've been pulling out of Indian equities for 7 straight sessions now. Because of the uncertainties around the US trade deal, currently it is not clear where the tariff position will end up with respect to India. The US President Donald Trump has already pointed out that the tariff could be anywhere in the range of 20-25%. The Indian government has been indicating through sources that there is going to be a trade deal signed much later than the August 1st deadline. Essentially on the 25th of August, a contingent from the US will be coming into India and discussions on the trade deal will continue after that. So what the market is watching out for is any clarity on when actually the trade deal is going to be signed, and thereby what are the tariffs that India will have to pay to sell in the US.
Right, Rishi, thanks for that. And it's time for an NDTV Profit exclusive, viewers. Sources have told us that the exchanges are at present actively monitoring only Chain Street among other high-frequency trading firms. Market regulator SEBI has not mandated to track other high-frequency trading firms such as Citadel or Millennium. Let's now go across to my colleague Charu for all the key details on this development.
So we must understand that exchanges, being the frontline regulator, have their own alert systems to sort of understand if there is something shady going on the part of a high frequency trading firm, a quant firm or investment management firm or any other entity that is involved in the derivatives market or in the markets in general. And the regulator, the Securities and Exchange Board of India, had after its order, after allowing Chain Street entities to come back into the Indian markets, had asked the exchanges to be more cautious and monitor the entire situation very closely. So now we have come to know from the exchanges that despite several speculations and reports that Citadel or Millennium or other firms might also be under SEBI's scanner for manipulation in different indices, currently exchanges have not been given any mandate to look into Citadel's or Millennial's trade or any other high frequency trading firms trade for now. There is no SEBI mandate to do so. So currently they have only been asked to sort of monitor the Chain Street situation. Additionally, they have also not received any speculative, shady or mysterious activity on the part of other quant firms either. There has been no mysterious or alarming voluminous trade situation that their alert systems have picked up. One of the highly placed sources said that if such a situation arises, they will be going to the regulator about it. Now coming back to Chain Street entities, it was reported by NDTV Profit exclusively about 4 days back that Chain Street had sought more time from the regulator to give its reply in the process that it is undergoing with the regulator, and is currently staying away from any voluminous or high level trades for now because of the active monitoring situation. So let's see how further developments on this roll out, or if exchanges are further directed or mandated in future to look into the high level trades of other high frequency trading firms that are operating in Indian derivatives market.
Right, Charu. Thank you so much for that. And moving on, viewers, Indigo's first quarter numbers are out. Revenue has gone up slightly by just over 4%, while the EBITDA, after adjusting for Forex, was up over 3% over the previous year. EBITDA, which is earnings before interest, taxes, depreciation, amortization and rent costs, was flat at 5,866 crore rupees. Net profit, though, is down 20%. And on to another story which is making headlines. The Kapoor-Sona BLW saga continues with another twist. My colleague Vishwanath Nair again joins us now with all the latest details on this case.
So what's happened is that a cease and desist letter has gone out. Essentially, the cease and desist letter states that that Rani Kapoor and her group of people need to stop defaming the company and that they have to withdraw the letter that was sent out on the 24th of July. Essentially, that letter, in that letter, Rani Kapoor had requested the board to stop the appointment of her daughter-in-law, Priya Sachdev Kapoor, onto the board, and that she needed to take 2 weeks to essentially look at all the legal issues there. She's pointing out that there were a lot of illegalities happening within the company and that her rights were being stolen from her. So now, of course, after that, Sona BLW did put out a statement to the exchanges claiming that she has no rights in the company. She's not a direct shareholder. She does not hold any indirect position in the company either. Rani Kapoor's wealth is tied to Aureus Investment, which is the promoter firm that owns majority stake in Sona BLW, and in that company, her stake is held by a family trust. So essentially, this fight between Sona BLW, its current owners, and its family members is all becoming a little bit ugly. Clearly, the cease and desist letter, we need to see what exactly the response from the Rani Kapoor camp is. So far, they have not yet decided what they are going to do.
Right. And moving on, US statement on August 1st deadline seems to enhance the credibility of a threat. That's the word of Arvind Virmani, member at Niti Aayog. Listen into what he had to say on the potential tariff from the US.
So actually, thinking about it in those terms illuminates this. What seems to be is classic game theory. Okay, so the statements are designed to increase credibility of the harm. Okay, and so one should not, I don't want to comment on the specific things because that's the whole point of negotiations. It's all about changing the perceptions. It's all there in game theory, actually. Okay, so two things I would say. We should not weaken the case of our negotiators. Okay, by supporting an opponent's game theoretic moves. Okay, so don't believe everything the opponent says.
The first waves triggered by a massive 8.8 earthquake off Russia's coast have reached Hawaii, with a 4-foot wave recorded off Oahu. People in Hawaii, some parts of the US West Coast and Japan have been told to evacuate after one of the strongest earthquakes in modern history hit Russia's eastern peninsula. A massive 8.7 magnitude earthquake struck off Russia's peninsula, prompting tsunami warnings in Russia, Japan, Hawaii and the US West Coast. Waves up to 4 meters hit parts of Kamchatka. Japan expects waves up to 3 meters. Evacuations were ordered in coastal towns. Damage reported in Kamchatka, including a kindergarten. The quake occurred at a shallow depth of 19.3 kilometers, increasing tsunami risk across the Pacific Ring of Fire. Every time a child is trafficked, a childhood is stolen. Today, July 30th, marks the World Day Against Trafficking in Persons. To strengthen the fight against this grave crime, the Railway Protection Force launched a month-long national campaign on July 1st, focused on identifying and rescuing vulnerable children in transit across India's vast railway network. Supporting this effort on the ground is the Association for Voluntary Action, a partner of Just Rights for Children, working shoulder to shoulder with the RPF to protect children at risk during their journeys.
Do you know how easy it is for a 12-year-old to disappear in plain sight at a busy railway station like this one? For traffickers, bustling railway stations are a perfect cover to move children from one state to another unnoticed. For decades, trains have been used to transport trafficked children, and railway stations have acted as transit points in that very dark journey, as the children are ripped away from their families and their childhood.
So there are two specific modus operandi which are used by children traffickers. Under the first, they go to the poorest parts of the country, they go to the villages, and they come somehow sweet talk the vulnerable and poor parents, and they show them a promise of a high-paying job in a big metro and a comfortable life for their kids. Our experience is that normally in a group there would be about 10 to 15 children and 2 or 3 traffickers. Then they book trains. The second is more sinister. There are a large number of children who run away from home and they board the first available train at the nearest railway station. Once they reach there, they are spotted by the human traffickers which are prowling on the railway platforms, and they take the poor and probably hungry child into confidence and whisk him away.
Surveillance on suspicious movements of children inside train coaches and at railway stations is a critical part of gathering intelligence. Traffickers look just like you and me, blending into the crowd.
I think our association with the Association for Voluntary Action was in fact a milestone in our efforts aimed at eradicating the evil of child trafficking. The Association for Voluntary Action provided capacity building efforts. In different parts of the country, the RPF personnel were provided comprehensive training in all aspects of child trafficking.
बहुत ही फ्रूटफुल रिजल्ट देखने को आया। मैं डेटा की अगर बात करता हूं तो आरपीएफ और आवा के बीच में जब से एमओयू हुआ उसके बाद लगभग 8000 से ज़्यादा बच्चों को हम लोग ट्रैफिकिंग से बचाने में कामयाब हुए हैं। लगभग 11,500 आरपीएफ ऑफिशियल्स की आवा ने ट्रेनिंग की हुई है। लगभग 500 के करीब हम लोग एफआईआर रजिस्टर्ड करा चुके हैं और 1100 से ज़्यादा अभी तक जो ट्रैफिकर्स हैं उनको हम लोग कानून के दायरे में ला चुके हैं और उनको अरेस्ट करा चुके हैं।
In India, through similar collaborations with multiple stakeholders, Just Rights for Children with law enforcement has rescued over 85,000 children and prosecuted more than 50,000 traffickers. It is only through such collective efforts that we can build a strong child protection ecosystem and ensure that no child ever has to lose their childhood.
And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hello and welcome. You're watching KYC. Today we're going to talk about a reasonably large company, 25,000 crore in market cap, is the largest standalone health insurer in the country, which is Star Health, and a company in which Rakesh Jhunjhunwala had a stake pre-IPO and continues to hold. So that's where it starts to get very, very interesting. And why is Star Health so interesting is because from the point of IPO till now, we've seen a sustained underperformance in the stock price. And can that underperformance actually change? Can there be a turnaround is really the question we're asking today, and probably we'll hopefully find answers to that. Trends with regard to competition and pricing in the health insurance space, that's the other thing I want to talk to them about, because Lombard has come into health insurance in a big fashion. So we have a large competitor coming in a big fashion, and therefore competition is tough. On top of it, they already have a market share of 33%. How much higher can it go? That's really the question. Is that sustainable in terms of a trend, or will they just try to maintain the 33%? Maybe some indication there as well. How much can the combined ratio improve? Now, in layman terms, the combined ratio is nothing but a measure of profitability on the top line. It factors in the expenses, the management expenses and the overheads of the company, and thereafter factors in all the claims that the company has received and paid out. And thereafter, you arrive at the bottom line profit. So a combined ratio of 100% will mean you're at a no profit, no loss in your business. A sub 100% will mean you're starting to get profitable, and above 100% means you're yet to break even on the operational side of the business. So I want to understand where does that go and how much can it improve by. What to expect on the investment income front. So one part of the top line is obviously premiums that you make as a health insurer. The other part is the investment income that you make on the money that has already been deposited with you by the customers. Say for example, you're a customer in a health insurance company. You've paid out a premium in year 1. In year 3, how has the company reinvested that premium, earned a yield on it? That essentially is the investment income. And there are certain levers which they are trying to tweak with regard to the investment income. So we will try and understand that. What are the levers therefore for profit growth? We'll speak about the combined, we'll speak about investment income, we'll speak about top line growth, and therefore those are the key levers, of course. But how do they move, and therefore where does profit go? They've guided for a doubling of profit, a tripling of profit, I beg your pardon, and doubling of top line by FY28. So I want to understand how confident are they of that journey. What is their ROE target? Because at the end of the day, shareholders want returns, and your returns are linked to the ROE number that the company clocks. So is there an ROE target internally, and how sustainable is that target across cycles? Because with COVID comes health insurance claims, and therefore it's a cyclical business of sorts. So you want to understand how sustainable that number is as well. We'll try and explain and try and get an insight on all of this. But first off, as we always do, let's start off with what the company is all about. It's, as I did mention, it's the largest standalone health insurer in the country. It was founded in 2006. It's pure play into health, focused on retail, which is individual and family, and it also now has started to do wholesale in a bigger fashion. It commands a 33% market share in the retail health space, 44% among standalone health insurers. It has a network of 900 branches, over 7.5 lakh agents, and 14,000 partner hospitals. How the model works is, you pay a premium to the company. If at all, God forbid, you were to be admitted to a hospital, the tie-up with the company ensures a cashless claim to you. So therefore, this number starts to become important when you're looking at a health insurance. Now, last off, it's a listed entity, major shareholders, and it got listed in December of 2021. Major shareholders include the likes of a Westbridge as well as a Jhunjhunwala family, all of which sit within that promoter group. So you want to take care of that when we go to shareholding pattern in our metrics. Now let's look at the products. Retail health insurance is the flagship product. There's also group health for corporate, SMEs, MSMEs, and there's personal accident, and there's also travel insurance. They have cancer care, autism care, cardiac, women's health, and braille policy. All of that is an industry first, is what they pride themselves for. They've done innovation in terms of digital products, wellness integration, and they have certain sector first features. Ayush and mental health is covered in all of their retail plans. So something again which stands out. Let me talk about the business model, and I spoke a little bit about it. So first off, it will sell health policies. It will collect a premium. That premium will be collected over many, many years. Hopefully you don't have a claim. Good for the company, good for you as well. And that premium is invested. Invested in where? Debt, equity products, right? And a percentage of the loan, the mix of equity is going up. It was sub 15%, it currently stands at 17.2%, just for your knowledge. The core revenue, of course, comes from premiums. In terms of the channel, 82% of the premium comes from the agency channel. It's expanding in digital as well as banca insurance, which is the banca channel, which is selling policies through banks. That's also something they're focusing on slowly and gradually. Otherwise, they've largely worked with agents. They sell to retail customers, but now have started selling to MSMEs, group businesses. The competition, of course, is the likes of an HDFC Ergo, ICICI Lombard, a Max Bupa, a New India, a Care, and market share. They have 33% of market share. We've spoken about that. Some concerns. It's a single line of business. They don't do too many lines of business. So that's one possible concern to take care of. Also, the claims have been elevated in recent years. COVID was one tipping point, but outside of that as well, claims have been elevated. The loss ratio has held up around the 70% number, which is a bit of a concern. Even though on the retail health side, the loss ratio is 65%. Because of wholesale growing, the loss ratio is elevated. There's a slowdown in profitability due to certain underwriting losses that they are making, especially with regard to claims. A claim ratio, a loss ratio is largely the same. That's how we're seeing the likes of a Star Health. Now let me talk a little bit about the key metrics that we'll focus on. An insurance company, and therefore you want to understand that the metrics might change a bit. We look at the income statement, then we look at key ratios, and I'll stick to only the key ones. I won't try and give you the whole hog. The balance sheet as well. We look at return ratios. we'll look at shareholding pattern, and everything else remains the same: street cred, street coverage, and valuations. So that's how we'll stack it up on a KYC in terms of the metrics. Let me start off with the income statement. Now, if you look at the income statement and how it's evolved, the net premium is around 14,800 odd crore in FY25. The 3-year CAGR on that is around 15 odd %. And it's been a steady growth, frankly. FY22, it was sub 10,000. It grows to around 11,000 in FY23, as you can see on your screen. FY24 was nearly 13,000 and currently sitting at 14,800 odd crore. So you've seen a steady 15% kind of growth. Your investment income, and I explained this, is up 18% on a compounded basis. Your claims, which also we spoke about, FY22 as the base has gone up by 7% CAGR, but FY22 as a base is an extremely tough year. Mind you, we had the second wave of COVID in the middle of 2021 calendar year. So therefore, the spillover of that has happened in FY22. And therefore, the claims in that year were quite large. It was significant. In fact, the claims ratio at that time was an 87% versus the 70% currently. And the claims ratio gives you the ratio of the claims versus the top line. So it was quite large. It was significant. So from there, from that higher base, it's grown at 7% CAGR. Just giving you that perspective that claims were anyway elevated, and on that base, the 10,000 crore of claims in FY25 still looks quite a bit elevated. You might want to work on that claims number, especially where Star Health is concerned, something you want to see. Where OPEX is concerned, this has been a steady state. They've been able to control OPEX well. It's been 11% 3-year CAGR on that OPEX number. And the commissions number, mind you, they have to pay commissions as well to their agents for every policy sold. So their commissions number also grew in line with the top line, which is 15 odd %. So no leverage being taken on the commissions number, but some leverage being taken on the OPEX number. So that's how it essentially looks like. Now let's look at key ratios. The combined ratio sits at 102.1% in Q1 FY26. So it's quite elevated. I explained to you that the combined above 100 means that on an operational top line basis on the premiums, the company is making a loss. So therefore, you want to start to see how does Star Health make a profit, right? It's on the investment income technically that they start to make profits. But broadly, this is the problem. The combined ratio has been elevated. FY23, we saw the combined ratio sink to 95%. FY22, it was elevated understandably because of COVID. We did discuss that. FY24, it spiked up. FY25, it spiked up further. And FY26 Q1 has been at 102.1%. So quite elevated. When you're looking at the investment yield on the portfolio of investments, it's come off. And that's also because debt or the cost of debt has come down. And therefore, you're starting to see investment yield come down to a certain extent. That's probably what's hurting the number. When you look at the claims ratio, that will give you perspective on what's hurting the combined. And the claims ratio, 87% in FY22, sank to 65. In the year in which it was 65, very good profitability. 66.5, very good profitability. FY24, we looked at that profit number. It was extremely strong for FY24. FY25, 70%. Q1 FY26, 70%. So you want that claims ratio to come down. We've given this a neutral as well. Because if the claims were to come down, there is scope for profit expansion. So you want to wait and watch whether that actually translates or that does not. Balance sheet, and this is of course more broad-based in terms of how one looks at the balance sheet. You look at the net worth, which is around 7,300 crore. It trades at around 3.5 times price to book, which is on the net worth. The net worth grows decently well. Around 2 to 3% every quarter is what it's been demonstrating in terms of growth, maybe 3 to 4%. And the investment that it makes is on that bottom line, 18,000 odd crore in terms of investments. Let's look at the return ratios. And again, volatility is evident. FY22 was a bad year, so was FY21, understandably. FY25 was sub 10%. So we'll give this one a neutral as well. Let's look at shareholding. And this is a clean thumbs up because you've got very good shareholders sitting here. No explanations needed on this one. Let's look at the street cred. How has the street rewarded shareholders? 4% up in 1 month, 1% up in the last 6. Year to date, it's been a dismal negative 9% return. 1 year, the stock is down 29%. And since the IPO, the stock is down over 50%. So could this be a potential opportunity is really the question. And of course, we'll have to understand and wait and watch for that. But let's look at valuation straight up. And you look at the price to book, we spoke about that. It's currently trading at around 3.6 times book. This is FY25 book, mind you. We looked at Q1 FY26 book, but broadly that's the number. The price to earnings ratio is around 40 times. And the 4-year average price to earnings since FY21 listing is 41 times. So very, very neutral on this count. But if the profit were to double by FY28, the price to earnings will shrink very, very rapidly. And that's where you could see an opportunity. So you want to wait and watch as to what's happening here. And the re-rating could be sharp if management guidance is followed. Because from the 600 or to 700 crore PAT that they're doing currently, they could well do 2,000 crore of PAT by FY28. So you want to see whether that is doable or not. We'll wait and watch for that. Now, last off, on analyst recommendations, there are 14 buy calls, 6 hold calls, 5 sell calls with just a 4% upside on this stock. Not looking pretty, but given the kind of buy calls, we've given this a neutral again. And therefore, that stacks up all of our 8 KYC rating parameters. Let's go across and see what is the final rating that we get for a Star Health on KYC. Pretty much all neutral. Shareholding is a clear thumbs up. Street cred is a clear thumbs down. Street coverage and valuations too are neutral. 4 out of 8 is what Star Health gets on our KYC rating, but plenty of moving parts, a turnaround at play. Let's go across to the management. We spoke to Mr. Kambli, who's the CFO of Star Health earlier today. Let's go across, listening to a slice of that. How are you tackling, so let's go line item wise. In terms of top line growth, how your growth seems decent. Can you hold on to market share? Can you build on the market share? Is competition coming in a big fashion? How are you standing out? Just talk to us about top line first, because that is your key driver for bottom line growth, is what you're saying.
Yes. So, as we see for the quarter for last year, we have been holding to our market share of 33% on an annual basis. For quarter one, the market share is 31% when it comes to retail health. With the kind of scale that we have in terms of our agency base, the way we have built our digital business, we believe we'll be holding on to the market share as well as keep on improving on it. But in the areas where we want to focus, we just don't want to go all out. We see a lot of growth shown by competition, but that is based on portability. Portability for us is only 10% of the fresh business. So we continue to grow with all the operating parameters working in our favor. In terms of competition, we see that competition is always there, will be there. It helps to expand the reach of insurance in this line of business.
Sure. So pricing at this point, you feel there is still some price hike warranted, or you're comfortable with the way pricing is played out over the last 12 months and now no more price hikes in the system?
See, we believe that pricing is an annual thing, with the kind of inflation and the severity that we see. Pricing is an annual exercise. We have taken price increase for 65% of the portfolio last year. It's in the range of 8 to 9%. If we go back in time, the pricing used to happen every 3 years, which was in the range of 20-25%. But what we see is that the annual pricing is much more relevant. It doesn't pinch the pocket of the customers, and it helps us to bridge that gap in terms of loss ratio. So the price increase will be an annual affair for our portfolio.
Got it. But sir, so how does top line growth ensure that you get a better combined ratio? Because largely, wouldn't you believe that new customers coming in will have a similar kind of a vintage?
Absolutely. So when we talk about price increases, we talk about claim-based discounting as well. The customers, who are not claiming, we we have our provisions to give them discounts. We have various methods to give discounts to the good customers. We have something called as a network-based discount. Customers who are ready to take treatment in good hospitals, not necessarily in tertiary care hospitals, there is a discount available to them. So while ensuring affordability of the price for the new customers, we ensure that the overall portfolio yield is maintained. And that is how we want to maintain the loss ratio of the business.
Right. So now the other line item with regard to investment income, your investment yield has actually come off. It's come towards the 6.5%, but the equity as part of your investment corpus has gone up in percentage terms. And that tilt is likely to continue towards equity going forward. Give us that perspective, and therefore, what is the impact on the yield maybe over the next 2 years that you're seeing?
First is to counter the 6.5%. The equity investments, the rates investment, which does not have a fixed income flow, is now 17.5% of our portfolio. Now, if you calculate only the fixed income yield on the total portfolio, it will always be lower because we have increased our proportion of equity business. What we see is, with a mix of fixed income and equity portfolio, the average portfolio yield should be closer to 8%. That's the objective of the business. Whereas when we invest only in the fixed income, it is closer to 7.25%. So we see with the right mix of fixed income as well as equity portfolio, the yields to improve over a longer periods of time.
Got it. So where should your combined, or where do you envisage your combined? And I'm not asking you for a guidance, but just for a broad parameter on where one should envisage both combined as well as claims in terms of a ratio. And I'll go into retail versus group. But for the moment, just combined versus claims over the next 2 years, where should that number broadly go towards?
See, Harsh, what we're looking at is a ROE target. We see that claim ratios will be a function of the pricing by the healthcare providers, by the company, mix of retail and group, a mix of indemnity and benefit. So there are various factors that will play out. What we are saying is we want to maintain an ROE target, which is upwards of 15-16% over the next 2 years period, by FY28. That's our stated objective, and we are well on course to achieve that. We believe as a measure to improve operating profitability, expense ratio has to be controlled. A lot of effort is going into it. Claim ratio can be slightly cyclical as well as a function of the various product mix and the indemnity benefit, all those segments of the business. But the objective is to ensure a healthy ROE of 16% and above on a consistent basis.
And how confident are you of achieving that, sir? A 16% plus ROE consistently?
So we are very much confident. All the business actions and the strategy that we're working is playing out. We are confident about it, and there is a clear strategy to achieve that ROE targets.
Point taken. Okay, I want to also delve a little bit into competition. I know you've touched upon it, but there is one competitor in particular which has been aggressive in the health insurance market. Do you believe that the growth, therefore, might be limited in terms of a window? I know you've grown 18%, excluding 1/n, which is the new accounting norm. But excluding that, I know you've done well. But do you see pressure there on that number?
See, again, we believe India is a huge underpenetrated market. The options are huge. You have to see the business that we come from. A very significant portion of the business is from tier 2, tier 3 cities where we are the market leaders. Even in all the states of the country, we are the market leaders. And that's true because of our agency workforce, because of the investments that we have made in digital, because of the product innovation and the product features we are able to come on a regular basis. So we believe competition is good, competition is there and will always be there, but the strategy that we work with will ensure that we maintain and improve on our market share.
Okay, so that's all the time we have on KYC today. In fact, that was management interaction with regard to Star Health. The stock perked up in trade on the back of numbers. Stay with us. Completely out of time on KYC, but more action will follow.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, credit cards, a lot of people view them as a fantastic tool to manage cash flows. They can also give you amazing rewards in the form of points. They can get you a business class trip to a location of your choice. They can get you free air tickets. They can get you free movie tickets and everything besides. But the dark side of that is that if you go overboard, there is a potential to slip into a debt spiral. And incidentally, based on the data that Cliff Highmark has pulled up, there's a substantial increase in the overdue amount for credit cards between 90 days and 365 days. This is essentially when they become non-performing assets. And that number stands at 34,000 crore rupees at the end of March, and the increase is of as much as 44% over the course of the last financial year. Joining me now in the studio to talk about some of the trends that are emerging is Sachin Seth, who's the chairman of Cliff Highmark. Sachin, thanks so much for taking the time.
Hi Alex, my pleasure.
That number seems very alarming. Anecdotal evidence does come through, people saying, hey, you know what, I have too much of credit card debt. They're paying their minimum due amount, but there's a significant overdue that they have, and this is piled up. How has it come to this?
Yeah, so Alex, if you see, the credit card is one of the means of unsecured loans, what people use. And if you look at the situation in last about a year or so, I think many of the loans categories have had a bit of a stress. So credit card is also one of them. And if I give you the overall statistics, see there are about 11 crore cards in the market.
Right.
Total outstanding is ranging about 3.7 lakh crore. Now, as you rightly said, it was around 30,000 crore as of last year. But this year has increased significantly. And one of the reasons for that is obviously because the stress is there in the unsecured loans in other portfolios as well, right? So credit card also happens to be one of the type of categories which people are
spending, but they are finding it difficult to pay back because of various reasons. So that's where it has gone up quite substantially.
So, but let's talk about this because the data that you pulled up also seemed to suggest that card companies or issuing companies, banks, are reducing the number of cards that they send out. So on the one hand, there are fewer cards being issued, but the usage of credit cards is still going up. So it's actually quite interesting that people are spending more on the cards that they already have and new issuances are not taking place. Why is this happening?
Yeah, so see, as I mentioned that, card is an unsecured product from loan category perspective. So there has been, because of delinquencies increasing, most of the lenders have become very cautious, and as part of the cautious approach what they have taken, and even regulator has advised being cautious on unsecured lending. So from that perspective, companies are become more stringent about whom they give the card, and they are doing a better underwriting at this moment. They are trying to contain the risk as much as possible in the new issuance, and that's why the new issuance has gone down by about 27%. And but yes, there has been another category of card coming in the market, which is called secured card backed by FD. So that is something, a new phenomena which is evolving.
These are credit cards.
These are credit cards, but the people who do not have as a strong credit score or credit history, what they can do is that they can actually put a FD in the bank and get a credit card which they can use it so that the bank is secured. So that tomorrow if they are not able to pay back, then bank can dip into the FD.
So I'm sure that you've collected a lot of granular data here. So anything to add color to this is that in these instances where there are delinquencies or there are people that are overdue on their payments, are there instances where people have multiple types of debt and this credit card debt is only one of those? So for example, they have a mortgage, they have a loan on a car, they have a loan on electronics, and they have a credit card. Is that the situation?
Yeah, that's normally the case. So if you see when anybody is issued a credit card, the person needs to have a certain level of credit history. Then only banks are comfortable giving the card to them because they understand that what's the payment behavior in the past. So naturally, the person would have had.
I'm talking about concurrent.
Concurrent. Yeah, I'm talking about that. So I'm coming to that. So basically, which means that people are in the category of taking multiple types of loans. They could have at this moment certain personal loans, consumer durable loans. They could have auto loans. Or they could have basically the loan against property, or let's say a housing loan, right? So definitely most of these players, 50% at least, we see that they would have some other loans, right? Now, question is that which loan they will default will depend on multiple factors, right? So in case of credit card, they obviously have option to revolve or pay minimum balance, etc.
But the interest still accumulates.
But interest accumulates. Yeah, there's a it's a highest interest rate product. And but yes, it's not that they would not have other products, and it is not necessarily that if they are defaulting a credit card, they will not default on other products. There could be a simultaneous default also.
But the fact that and the data that you pointed out, right? So up to 30 days, 30 to 60 days, 60 to 90 days, and 90 and beyond is how you look at it. And 90 and beyond is when it becomes a bad loan, right? When it becomes a non-performing asset.
Yes.
And what you have actually witnessed is that there's a substantial increase in the 90 plus category, which seems to suggest, correct me if I'm wrong, when you're talking about credit card usage, people have revolved till the point where they can't afford even that minimum payment, and it's gotten too big to handle. Is that the right understanding?
That's correct. So basically, they've reached a situation wherein it's gone beyond 90 days in terms of default, and basically lenders are now in the process of, they have classified as per NPA, as per the nomenclature, and at the same time they must be in the process of engaging with those borrowers to see how they settle. Or how they recover.
I want to clarify. When you pay the minimum due, it's not a default.
It's not a default, but yes, but it does impact it does show into your credit history point of view, but it's not a default.
So, but then what we're talking about, 90 plus days, this is overdue with not having paid that minimum due, right?
Yeah, absolutely. So they're not paying.
They're not paying at all. They're not paying at all. So therefore, it's important to make that classification. So from your perspective, in terms of good credit behavior, is it always a good idea to pay the entire credit amount and not have that minimum due that is used to circulate credit?
Well, absolutely, and I would go one step forward and say that do not use your credit cards unless in exceptional situation to a max out limit. So one should use the credit card judiciously. One should have a limited number of cards what you can, really manage. And if you,
Sorry, I want to stop you there because a limited number of cards to manage is an important question. I wanted to come to that later in the conversation, but now that you said it, you hit the nail on the head. A lot of people go out and try to get the best possible cards. You have social media videos saying this is the best possible card for rewards, and everybody wants that card. So you end up having 3, maybe 4 credit cards, and that's pretty normal. Even for somebody who is relatively risk averse, they'll be like, okay, fine, I need that air miles, right? So what have you witnessed in the data? Has that borne out a lot of people having multiple cards?
See, having multiple cards is a very common phenomena because once you are entitled or eligible to get a card from a bank, you typically are entitled or eligible to get it from other bank also. Now the question is that when I said that one should be judicious enough to basically have number of cards, is that the more cards you take, it shows as your basically the line of credit. Right? Which means the bank has offered you a line of credit. It could be 2 lakh rupees, it could be 5 lakh rupees based on your income, what they've done a calculation. So the more you have, it shows that you are credit hungry, which is obviously not a good sign beyond a point. And second point is that if you are using the card to a higher limits always, it shows that you are stretching it. Basically, your credit requirements.
You're maxing it.
Your credit requirements are higher, and that's where.
What is the definition of overusage?
See, when you say if you are using around 30 to 40%, a credit card is reasonably normal phenomena. But if you start going to 70 or 80% in every month, see if it happens like couple of months in a year, etc., it's fine because then you may have to buy something which is on a festive period or something which you would like to specifically take from a particular card. That's fine. But if you start using card for a higher, utilization all the time, then definitely it reflects that, you are basically in the need of higher credit. And that is where the balance has to be there that, how much you use the credit card versus other means of taking the loans. And that's where, these are some of the things which does impact from credit, behavior perspective. But coming back to the point, the people who, like a question you had is that the people who have credit card, will they have other loans? Absolutely. Chances are very high. Will they be defaulting on some of the loans? That's also a possibility. So
and then a follow-up to that. You said multiple credit cards. There is a perspective that if you are closing out on a credit card, they can impact your credit score negatively because you're closing out a credit line of credit. Is that true?
Not necessarily. I mean, see, first of all, the credit score is built of multiple parameters. Every parameter has a certain weightage. Certain weightages are for the, the credit limits what you have, and certain weightages are for the type of repayments you are doing on time. So I would say if you have a larger number of cards, let's say 8 cards, and you close 2 cards or 3 cards, it will not negatively impact. In fact, it could be a positive side to show that you don't want to have.
So question to you, there is good practice when you're managing credit. How many cards is too many? How many cards is okay?
Well, it's a very individual, assessment because if somebody has, let's say, higher income, if person falls in a high net worth individual category and the person has a substantially high income, person can afford to have 4 or 5 or 6 cards very comfortably and could have the limits there because assessment is done accordingly. But if a person is a young person who has just started career and probably is in the early stage of his career, then probably not have too many. Then the person should start with 1, maybe 2, and then build their score, build their repayment profile, and then they should look forward to have higher income and the more credit cards.
And the final piece of advice, because you look at a lot of these situations when you're trying to get rid of this loan or you're trying to repay in a situation where you defaulted and it's credit card debt. It's the most expensive kind of debt. 40+% is what you're paying on an annual basis. How do you get rid of that?
Well, I mean, the best thing is that engage with your lender. Discuss with them your situation. Figure out a way that you settle it. Because most of the lenders also do not want to carry NPA or provisions on their book, right? So they would also be forthcoming, and there are means to, address that. But definitely anything you settle or anything you basically not pay definitely will impact your credit history. But engaging with lender and settling it would be the best way to really come out of the situation.
All right. Thanks so much for joining me today. Always a pleasure speaking with you.
Alex, thank you so much. Thank you for inviting me.
Well, There you have it. The numbers are a little startling. 44% increase in the overdue amount in the credit card space over the course of the last financial year, and 30,000 crore, 34,000 crore rupees is the amount that we're talking about that is overdue by more than 90 days. These are bad loans, and a lot of these individuals are going to have to go and engage with their lenders, scramble for funds, because this is the worst kind of debt, the most expensive kind of debt. Let's talk about how to extricate yourself from a situation like this and how to avoid it in the first place. A lot of people talk about the benefits of credit cards and not enough are speaking about the pitfalls. So let's spend a little time to talk about that. Joining me today is Pratibha Girish, who's partner at FinWise Personal Finance, and Raj Khosla, who's the founder and chief executive officer of My Money Mantra. Thank you so much to the both of you for taking the time. Raj, I'll come to you first. I feel like I'm a little old-fashioned. I have one credit card and I think that's perhaps one too many. And I don't like debt. Would you say that times have changed and changed how? And do you think that everything that's occurring right now, do you think that it's okay?
Well, I think times have changed. You said, well, the more things change, the more they remain the same. So nothing has changed, as dramatically as one might think otherwise. But I just want to rewind the tape a little bit. None of this debt, which you said that, spiraling out of control and, how much more it's gone up, these things don't happen in a vacuum. They happen because you're part of a much larger ecosystem. As such, don't ever lose sight of the fact that, we came out of a COVID situation, which taught everybody technology, it taught everyone how to issue cards, and therefore, maybe they ended up issuing more cards than they intended. And all those who were receiving those cards, probably because of COVID, had also lost their jobs or their incomes had gotten severely depressed. So they overused their card. What we see now is a cumulative effect of what has happened in the years gone by. So yes, attitude changes, that matters. But remember, circumstances what fashions attitudes, not the other way around. Attitudes don't make circumstances. Attitudes are developed by what's happening around us. So, and you did say something about one card too many, debt is the worst, credit card is the worst kind of debt. You don't like debt. Frankly, I think it's a universal feeling. Nobody really likes debt because you have to pay for it. Nothing in life is free and nor is debt free. So it's only a matter of necessity. It's only when you're cornered you look for debt. Otherwise, frankly, nobody even thinks about it.
Yeah, but that's not how people are using credit cards, Pratibha. People are buying everything on their credit cards. In fact, I know people that have all of their expenses on their credit card, and at the end of the month, they're using whatever is in their account to clear the debt. As long as, and this is the justification that they have, which is fair, as long as they spend less than 50% of what they have in their account, and they have enough to cover that credit, they're fine. Is that okay?
I don't think so. I think people underestimate how painless it is to spend when you're using the card. Nothing goes out of your wallet. You don't feel the pain at all. When you're giving hard cash, you think twice. UPI also, your deposit, your account balance is depleting, and you can see that. It's not as painful, but it's slightly painful. But credit card is like for tomorrow, or people think, we'll see. I mean, we will find some ways to pay it back. Also, there's this huge FOMO which is going on. You see a lot of influencers on social media. You just get into social media and you see people who are using, like you said, business class tickets to go abroad, staying in 5-star hotels for free. And you feel actually, you end up feeling stupid. Why am I not using the cards? I am spending that kind of money. Why don't I use the cards? So I guess if you want to use the card, I tell all our customers a similar thing, that if you want to use the card, have it on auto debit, as in only if you have the balance, then use it. And like, he also pointed out very correctly, there are no free lunches. So if somebody is giving you reward points, what is the percentage which you're paying for it? And are you actually going to redeem those reward points? I know of people, both friends and customers, who have huge 1.5 lakh reward points, but they have no clue where to redeem it, and they continue to debate on whether I should go and travel, not travel. But for every spend, they're paying slightly more. So I think it's important. Whether you have one card itself is very difficult to manage, but if you choose to have 2 or 3 cards, you should have it on auto debit, very clearly indicating to you that only if you have the money spent, otherwise don't even bother.
Pratibha, I'd like to meet these people who have a lakh plus of reward points, and I can help them because I certainly don't have that many, and I know exactly what I would do with all of those points. But Raj, talk about correct usage. You said that it should be a last resort, and in fact, every time we talk about the use of a contingency fund, a contingency buffer, and everybody should have something like this. And I've had conversations about keeping money in a savings bank account as well. It doesn't make sense because the rate of interest that you're getting is what, 2.5%. And so therefore the response that I've gotten is, why don't you use a credit card to take care of those immediate requirements? And so that is the definition of emergency, but people don't use it like that, Raj.
No, they don't. So I'm afraid I didn't quite get the question. You mean that how to create an emergency fund?
No, I'm saying how do you use a credit card in your opinion? Because what according to you is the prudent way to use a credit card? Because on the one hand, you have so many rewards, as Pratibha has pointed out, and frankly, there are people that use it very well. And there is the use of that 45-day swinging window, that circular door, that people use very well.
Yes. So how to use a credit card well? First and foremost, and a lot of talk has been going on about reward points. I just want to put it on the table that reward points is not the reason for using your card. That's only an aside. The real reason for spending is because you needed to spend for the purpose you were spending, and reward points only came on on the side. So it seems to be, as some people would like to spend because they're accumulating, reward points, but that's not really the way to think about it. Your question was, how should we think about spending? You should only spend on the credit card what you actually intended to purchase and had the capacity to repay. There's no point saying that I'll find money later, let me buy it now, I'll repay it one way or another. That's really not financial discipline. You could rather say that I would use if you had 3 credit cards, all right? All of them had different settlement dates. At least 2 had different settlement dates. You use the card in a manner whereby you would use the card where you had the later settlement date, to spend more of the money, and then clear that off, and then do a little bit of teaming and lading with respect to when you were going to repay the amount overdue on that card. And that is the way to use it, and not to say that I'll find some way. That's financial indiscipline. That I'll find some way of repaying this debt. That's not the way to spend on your card. Yeah. Only spend what you can repay. And if you have more than one card, which I would certainly recommend, have 3 cards at least, then have different settlement dates. Because then you can you can postpone the repayment. You can avail free credit. But yeah, if you start paying for that credit in terms of either 36 or 42% per annum rate of interest, then frankly, I think you have a problem.
Okay, I take that point, Raj. So therefore you're saying use 3 credit cards, and so therefore use it smartly, make sure that they have different settlement dates. But I do want to ask you, how do you determine what your limit should be? Because ultimately, it's a function of your cash flows. Depending on your cash flows, your bank will offer you a large amount of money, but you don't necessarily need all of it. And the gentleman from Highcliffe Mark was suggesting that using only about 30 to 40% or even a maximum of 50% is what I've heard of the limit that you have is good prudential use of the card, because it indicates that you're not struggling for money. So how do you set that limit in your opinion?
Yeah, there are 2 things. One is that we shouldn't confuse the limit that the bank has set for you.
Yeah.
That is divorced from what is the limit that you can spend. They may have made a determination about the maximum limit, let's say 5 lakhs that you can enjoy on your card. But at this point, you may be in hard times and you are not able to repay more than 1 lakh or something. So your limit is your own limit, what you can repay comfortably. And that's, say, 1 lakh, despite the fact that the limit set by the bank is 5 lakhs. So that doesn't give you an excuse to, to spend all of that 5 lakhs if you can only repay 1. So that's one distinction which is very important to draw. Your own limit is your own limit, as distinct from what the bank has set on that card.
You can use a slider on your bank app to set that individual limit for yourself within the overarching framework or limit that the bank has set for you. Pratibha, in a situation where you find yourself behind on payments and you've been forced for whatever reason, even though you should never do this, to pay the minimum amount, how do you get rid of that credit card debt? And if you find yourself spiraling, in what order should you kind of get rid of that debt? Do you have some advice here?
Absolutely. Like you clearly said, it's the worst kind of debt because it's the worst kind of interest rate which you're paying. Imagine 44% interest is what you're paying. Can you get funds at lesser than that? Unfortunately, once you get into the spiral, your credit rating, the score which you have, CIBIL score, gets affected. Okay, so then your loans also going to come to you with a slightly higher interest rate. So it's important that you recognize that you're paying 44% and look around and see, are there any options for you to pay back this with the amount which is outstanding with a loan which costs lesser. Also remember, your revolving credit is available to you when you've paid in full. Whatever you spend, you fully paid up, and then next month again you get a 45-day revolve. But if you pay only the minimum amount, even the one which is carried forward will start attracting interest. So most people don't realize this and therefore they pay minimum. So there are a couple of pointers I want to give. One, it's very difficult to get out of a debt spiral when you continue to use your credit card. If you've decided and you know very clearly or you're getting into this and you want to get out of it, I would say just lock up your credit card. If you have the courage, even break it into pieces and keep it away. Don't use your credit card. Look for funds which are costing you lesser, and while using, you cannot get out of it, and clear your debt. Then start using credit card very judiciously. Number one, pay your entire amount. Only spend what you will otherwise spend. Now, if I'm going to pay my GST, I have to pay my GST every month. But if I can pay through credit card and get some reward points, why not? And I'm going to use the reward points. I know how to use it. I also know what is the cost which I'm paying extra for GST because I'm getting those reward points. Then it makes sense because I have the money in the bank, but I'm getting the GST at a discount, which it makes sense. I'm giving GST just as an example. Number two, don't ever withdraw cash from your credit card. Cash is not meant to be withdrawn from there. You will spend 2-3% as charges for withdrawing cash. And unlike normal spends, your interest starts from the day you withdraw the cash. There's no revolving credit. There's no 45-day limit, no nothing. So be very wary. Don't withdraw cash from the credit card. Spend and pay. Spend only things which you would even otherwise spend. You're using the credit card to get a slightly better discount, or you know very well that you can pay it back. And if you get into the spiral, then look for lower loans. Even personal loans will come at much, much lower, maybe half the interest rate. Yeah. Take it and clear off the loans.
Fantastic. All right. So we've gotten a pretty holistic view on the use of credit cards. Pratibha, Raj, thanks so much for joining me on Your Money Matters. Pleasure speaking with you.
Pleasure being with you, buddy.
All right. Well, that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
From horoscopes in newspapers to now real-time astrological consultations on your smartphone, Indian astrology is going through a massive tech facelift. And at the helm of this massive tech facelift is, of course, Astrotalk. Astrotalk is India's largest astrology app, and I'm joined today by Puneet Gupta. He is founder and CEO of Astrotalk. Thank you so much, Puneet, for taking time out. We'll talk everything from astrology trends to business models, from skeptics to believers, and we hope to cover everything that astrology stands for today. Puneet, talk to us about also what was the tipping point where you realized that this could grow to a mainstream business from a niche astrology app. It could go through a mainstream business at what, 1250 crore top line now?
Yeah, 1650 top line now. I think when we started, I didn't believe itna bada ho sakta hai. But after spending about 8-9 months talking to a lot of customers, we realized that there is a lot of demand in India where people want to speak to genuine astrologers, and there was no other platform which was providing that. So when we started working on one-on-one consultation, instead of working on कि यार content heavy apps बनाएं जैसे बाकी सारी थी, तो ये हमारे साथ I think we got lucky that we ended up with such a platform जहाँ पे डिमांड ऐसे ही बहुत ज़्यादा थी. तो we realized कि यार अगर मार्केटिंग अच्छी करेंगे, प्रोडक्ट पे और अच्छा काम करेंगे, तो we'll be able to build a very good business.
Puneet, talk to us about the scale of astrology in India, right? Estimates put it anywhere between a $7 billion market to $15 billion. Tell me, as a market leader, what do you see it as?
So again, I think it is very difficult to